So good morning, everyone, and thank you for joining in today's Saturday morning session. It's only because of your encouragement and motivation that the speakers from across India are interested and keen to join our Saturday morning sessions. I was recently speaking to uh, an advocate also when he went through senior advocate. In fact, when he was going through our videos, he was really mesmerized by the kind of contribution that we are having in the group. So I would thank each member for really contributing in every discussion. So today we have Yash Dadaji from Jaipur, who has taken part one of section ninth about levy and collection. So today he's going to take on the part two of the same section. He's going to guide us through some of the case studies, interesting case studies. I request each one of you to contribute. But as some of the members have, kindly shared their concern about the timeline, they feel that if we have a restricted timeline, maybe we'll have better discussion on all the case studies instead of maybe stretching one case study for maybe 20 minutes, if we can allot that time. So we'll be implementing that and trying that today. And thanks once again, and over to you, ESG.
And we'll
Thank
keep keeping the questions till to the end so that we don't disturb the speaker, unless otherwise it's very contrary.
Yes.
Thank you. Thank you so much, Arupji and Denuji. Thank you so much. Good morning, all of you. Apologies that one of the times we had planned the session, but due to some personal reasons, I could not take that up. So that's why we had to reschedule this. Thank you so much for that. As Arupji explained, we did have a discussion, I think last week, in fact, in the starting of October, regarding provisions which are contained in levy, section 9 of CGST Act. And we went through the provisions 9, 1, 2, 3, 4. And we had some discussion around what is a taxable event, how to identify a taxable person, whether the initial levy is on the supplier or is it at the same time on the recipient also. Then we discussed whether how about we would look at the provisions in respect of reverse charge mechanism, and we see to it that if, let's say, the supplier is unregistered or supplier is not liable to take registration, then in that case, whether if that tax liability to pay tax is in the reverse charge, then in that case, whether the levy would sustain or it would not sustain, in a sense that how do you interpret 9(1) read with 22, 23, 24, and what is the scheme of the law in this regard. Now, what at least I could think of doing is that there were two related issues to that, which we could not discuss in the last meeting. So I would first take that up. Then we were discussing about the manner in which the rate notifications are written. And then we will see to it that what is the difference when you're interpreting the rate notifications, again, from the perspective of levy only, in terms of supply of goods and supply of services. And then we would go to section 5 of the IGST Act, and we will see the issues around the proviso to that extent, whatever time is available with us. So straight away, we'll jump to first case study. I think these case studies were circulated by Arupji yesterday in the group. So I will just brief what is the issue here. Issue is very simple here. So let's say, in case we know that in case of a mixed supply, what happens is that the tax is liable to be paid on the basis of the component of the supply, which is the highest rate of tax. And that's what the provisions of section 8 says. Now, when you look at section 8 in accordance with, again, obviously to be read with the levy provisions under section 9, we have to see that if at all, when you basically merge section 8 read with RCM and forward charge, then in that case, can there be any ambiguity, or how is the law taking care of a situation which probably I could encounter in one of the cases where, let's say, in case of a media entity which is providing advertisement rights in print media or maybe FM radio or an event organized by the media entity as giving one of the sponsorship rights, and along with that giving a stall in a event organized to it. So to the advertiser, it is giving a comprehensive package where a single price is there, and again, that single price, 4 components are there. Now, in these four components, if you will look at from the GST perspective, we know that in respect of advertisement in print media, the rate of tax is 5%. All other cases, rate of tax is 18%. However, one of the component, that is sponsorship services, there in that case, the liability to pay tax is under reverse charge mechanism. Now, the issue which comes up is in these cases where it looks like that this whole bundle may not have the attributes of a composite supply, but it is for a single price, and hence that is why it may be treated as a mixed supply. And one of the component is taxable under reverse charge, and the other component, all other components are taxable under forward charge. But the highest rate which is applicable on the bundle as per the provision of mixed supply, in respect of highest rate, both components are there, one under reverse charge and one under forward charge. Then how would you interpret section 9 read with 8? And who is the person who is liable to pay tax in this case? Whether the media entity has to pay tax under forward charge, treating itself as a taxable person, or whether the recipient of these advertising services through various modes, they have to treat them as person liable to pay tax and they would be taxable person. First, I would like to solicit views of the group members. Then probably whatever view I have, I would like to contribute to that. Yes, anybody? Anybody would like to open whether we are not disputing whether this is a composite or a mixed supply. For the time being, we are assuming that this is a mixed supply. If it is a mixed supply, who is the person who is liable to pay tax here, or who is a taxable person here in terms of provisions of 9(1), the levy provisions?
Yes, can we say that for the RCM sponsorship services, it will be only on RCM, and for others, it will be on the forward charge?
Yeah, so that's a very interesting proposition, sir. But the problem is, in case of a mixed supply, then how would you bifurcate that? Because
Okay.
the condition in case of a mixed supply is that it is for a single price.
Right.
So I can't resort to valuation rules also in this case because I am not coming out of 15(1). So once I'm not coming out of 15(1), because I have a price which is for my sole consideration, then in that case, obviously I can't go to valuation rules and look for it whether I have to identify cost or any other method which is available. So I can't do that. So bifurcation, probably in my understanding, in case of between these four components is not possible.
Yeah, I think Ramandeep ji is also asserting to that view only.
Right. So as such, highest tax paid supply is also in FCM, so it should be FCM. So correct. So no, not correct, but then I have a counter question. So that is one possible view, because under forward charge it is there. Why can't I take a view by saying that highest rate is also there in reverse charge, and hence I would not be liable to pay tax in that case? I mean, what would be the answer to that? That why only I am the person who is liable to pay here as per the provisions of the Act, and why 9(3) would not be applicable on this?
So,
Yes. Yes, sir. Or Ramandeep ji, in case you would like to add something here. Receiver may object. Okay, so Ramandeep ji is saying, okay, receiver may object.
yeah, and another thing is whether the section 8 is basically for examining the tax rate or for who would be the pay. That also is a thing. Like,
okay, so I understand we would have discussed section 8. Probably what was the major consensus when as a group we discussed that I think probably Ramandeep ji took that session only in respect of composite
yeah,
and mixed.
yeah.
8 says tax liability on a composite or a mixed supply shall be determined in following manner. The mixed supply comprising two or more supplies shall be treated as a supply of that particular supply which attracts the highest rate of tax. That's it. That's what it says. Probably all provisions have to be read in accordance with what is that one component we are picking out of the bundle. The problem is which component I should pick, And that's where, in my understanding, probably law, at least to what I understand, law does not caters to these kind of situations. The levy provisions, when you read them strictly, and obviously you can't read it liberally, when you bring the angle of composite or rather a mixed supply having components where the one component is taxable or pay tax on that is payable under forward charge, and another component tax is payable under reverse charge, and both of them are into highest rate. In my understanding, unfortunately, the levy fails there because it brings out two taxable persons in this case to levy this whole transaction. And we know that at least all the four components or four pillars of levy, which we discussed, Mathuram Agarwal or Govind Saran Gangasaran, the person who has to pay the tax, it has to be absolutely clear. Unfortunately, in this case, what I understand, the person who has to pay tax is not getting clearer when you read 9.1, and hence in this case, on the whole bundle, the levy fails unless tomorrow, as Arupji suggested, the law allows us to actually bifurcate this into four different components and then pay tax accordingly. But if that happens, then in that case, the whole concept of mixed supply would go for a toss, because that's the whole purpose of identifying the highest rate of tax. So that's my view here, that maybe in these situations, when you have this combination of forward charge and reverse charge combined with other components, in some cases, the levy is failing. 9.1 is not taking care of these situations. Okay. If anybody has a different or a contrary view, most welcome, else we'll move forward. Okay. Ramanjit ji is saying it is a very aggressive stand. The point is, I have taken this stand, and this issue arose in one of the cases in audit observations by the department. In the spot memo, when they asked us, we asked the same question: tell us who is the person who is liable to pay tax. And they said, because 9.1, first of all, supplier is liable to pay tax. Hence, you would be liable to pay tax in this given case. And then obviously the answer we gave that, but the other component is there, which is payable in reverse charge. So where is the provision in the law which takes care of it, that both supplier and recipient in a situation can be asked to pay tax? The matter is still pending. Let's see what happens in such a case. Okay. Even if, let's say, what Ramandeep ji is saying, doctrine of constructive interpretation, the problem is constructive interpretation, in my view, has to ensure that obviously the levy has to sustain, number one, but that constructive interpretation has to be logical. What I see here, that the logical or the if I don't go by the literal interpretation also, and we try to bring in that logical interpretation to ensure that the levy sustains here, that interpretation, unfortunately, in my view, when both are at equal pedestal, one cannot stretch beyond to the words which are written beyond, or at least you can't go beyond to the intention which comes out when you read 9.1 and 9.3 here. So that's my view in this case. Let me take you to another example. So this was an example where I was saying that 9.1 is not catering to these kind of situations. Let's take another case. Again, what I am trying to basically find out by reading all these issues is wherever, because challenging a levy is obviously itself, it's a very uphill task. This next issue, probably what I understand, maybe levy would sustain, but still, how would I pay tax? At what point I will pay tax? That, again, keeping in context 9.1 only, I see a challenge there. So the issue is very simple. All of us know that we have from last year, there is liability to pay tax under reverse charge, where if, let's say, a registered person has taken a residential premises on rent, and then the status of supplier is irrelevant. It may be registered or unregistered, but if recipient is registered, then tax is payable under reverse charge. Now, let's take a situation where director of a company has given its premises to the company, and the company is operating from that premise, and there is no consideration involved, no payment is being made to director in this regard, and as such, no rent agreement has also been executed. But it is understood, in fact, that the company is operating from that particular premise, and necessary addresses and correspondences of the company or document that address is mentioned in respect of that company, and that address actually belongs to the director. Now the question, very simple question, is that who is liable to, whether the transaction is taxable, that's for number one. Number two, if it is taxable, who is liable to pay tax? That's number two. And number three, if let's say whosoever is liable to pay the tax in this case, at what point of time they have to pay the tax? In a sense, I'm asking at what point of time I would look at it that this is the applicable rate and the valuation in this case. For reference, I've mentioned Schedule 1 Entry 2 also, where transactions are without any consideration, and let's say it is between related parties. Then in that case, you have to still treat that it's a supply which is in course and furtherance of business, and then you have valuation rules taking care of the value in this case. Anybody, whether the transaction is taxable, one, if it is taxable, who is liable to pay tax in the reverse charge? Okay, Soumya ji is saying it is taxable under forward charge. Okay, any specific reason why it is taxable under forward charge when we have this entry 5AA?
One reason could be it's a Schedule 1 transaction.
Okay.
And we have to follow Rule 28.
Okay.
And in that case, reverse charge may not be apt.
Okay. The only counter to that would be, madam, if let's say Rule 28 is only for the purpose of determining the value of that particular supply, but 28 does not help us in determining that who is the person who is liable to pay tax. So 28 has a restrictive approach to the extent of what would be the value of that particular supply, if at all, let's say that falls within the levy provisions. Or are we saying that all the transactions which are there in Schedule 1, there cannot be any liability to pay tax under reverse charge in those cases? I hope I was able to make my question clear. Okay. Ramandeep ji is saying individual capacity, director. Probably what Ramandeep ji is saying in chat is because director might have given this property on rent in an individual capacity, hence reverse charge would not be applicable. In fact, circular has also explained that. But unfortunately, now we have this entry 5AA in reverse charge, which says services by way of renting of residential dwelling to a registered person, and the status of supplier, it says any person. So any person would include a person who is given that in an individual capacity. And hence, that is why in this case, one would take a view by saying that that director might have given that in an individual capacity. So given an individual capacity, but still if the recipient is a registered person, then in that case, I would take a view by saying that transaction would be taxable under reverse charge. So Jigarji, we will commercial property, probably in that case, reverse charge would not be applicable. One view would be that because it may be a commercial property, but reverse charge would not be applicable. It would be not covered under 5AA. What my question is, it appears to me that if at all this transaction is taxable, the person who is liable to pay tax in this case would be recipient. At least there in this case, unlike the previous case study, we do not have an issue here. The issue is settled here. If it is a residential dwelling, the recipient is registered. Irrespective, whatever be the case, at least the liability to pay tax would be under reverse charge. Obviously, please, I am not referring to whatever we had in part 1, where I was saying probably in this case reverse charge would not be applicable. Reverse charge cannot be there where the supplier is unregistered. For the time being, we are parking the issue. We are moving ahead by saying we are not disputing that point. Okay. Mr. M. Raiji is saying where no rent is specified, what would be the value of reverse charge mechanism? So that's the another issue which sir is raising. Once there is no value here, probably the levy would fail on the point of view of valuation only. and you would not go forward to see that who is the person liable to pay tax, because the consideration would be zero in this case. The only question would probably be in that case would be, are these parties not related persons? It might have been given in an individual capacity by the director to the company, but are these not related parties? And in fact, it comes out that it has been given rent free because of that relationship which is there. And hence that is why one would actually take records to Schedule 1 entry 2, say that the price is influenced because of the relationship, though the property they would have the director would have allowed it to be used to the company in the capacity of a landlord without consideration, because the transaction looks like being affected there, and hence you would go to valuation rules.
SG, I have a small point.
Yes, sir.
As you said, as of now, the landlord, in a capacity of a landlord, the land has been given.
Right.
Landlord is not a per se related person, hence
Okay.
the reverse charge should not be applicable.
Okay. So we are saying because landlord is not a related person, hence we are saying value is not possible in this case. That's what you're trying to say, sir? Valuation would not be possible. That because see,
Schedule 1 will not come into the play.
yeah, correct. We're saying Schedule 1 would not come into picture because the valuation would not, one would say that value is not influenced because of the relationship. Okay. So that's one point of view.
And assuming for the moment, if the credit is available, then again I will take the benefit of the circular, which says the zero is the value is the
No, I am
acceptable.
not. No. I absolutely am not on that point, sir, that credit is available or not. In fact, I am not reading from that perspective also. What basically we are reading right now is only from perspective of 9.1, where, so in the last discussion, one gentleman asked this question that in one of the slides I had mentioned that time of supply is also very important when you're reading 9.1. And the question came, once the pillars of 9.1 are satisfied, then only the time of supply would come into picture. I said you are right to that extent that yes, the levy would sustain, but still the ultimate result, the payment of tax would be in question. And my issue is actually here in this case in respect of reverse charge. I am liable to pay tax where the valuation is deemed, if at all the valuation is deemed. Unfortunately, the provisions of the law, again, to my view, are still unclear. They do not bring out things very clearly. Okay, so Mr. M. Ramji is saying, what if property is owned by the person and his wife who is not registered? How will the value be determined? No, I'm saying I'm not on the valuation. Let me make my point very clear. Okay, let me take a simpler example so that we do not digress ourselves from the main issue which I want to bring in. Let's say there is a director in the company. He is giving some services and where he is not employed to the company. And whatever services giving, he is not being paid anything in that regard. Now, in that case, the provision of the law says services given by director to the company, they would be liable to pay tax under reverse charge. I think on that point, all of us are absolutely very clear. So there is a director, he has some skills, some expertise, he is actually contributing to the company and he is not paid any amount by the company. Now, the question which comes is that whether the transaction is taxable. The apparent answer which looks like is that yes, the transaction is taxable, and because there is a specific reference in RCM notification, hence this transaction looks like to be taxable under reverse charge. Now my question here, if let's say this transaction is taxable under reverse charge, at what point of time I am required to pay tax? In all these transactions where my price is influenced or I'm not actually making a payment to my related party and still I have to pay tax under reverse charge, at what point of time I have to pay tax? That was my question. Anybody would like to contribute? This is the provision section 13 under CGST Act regarding time of supply, that it determines what would be the time of supply in case of a reverse charge and at what point of time tax needs to be paid. Okay, what Jigarji is saying, to my understanding, value is always from perspective of supplier, that is one who provides the service. It's only a mechanism through which tax will be paid by the receiver. Okay.
Yeah, now, in this case, as regards as time of supply is concerned,
Yes, sir.
here assuming if it is a supply,
Yeah.
which is made by the director to the company, then the director has to raise a tax invoice.
Director is not registered.
Director is not
Registered in GST.
okay. So Fine, sir. Got the
That is the problem. Director is not registered. So once director is not registered, obviously you can't tell the director to raise invoice. He is not covered by provision of section 31. Right. Now let's read 13.3. 13.3 says, in case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, time of supply shall be earlier of the following dates. What are those earlier dates? First, date of payment as entered in books of account. Probably I need not read further because there is no payment actually which is happening from company to the director. So A would not be applicable here. B, date immediately following 60 days from the date of issue of invoice or any other document by whatever name called in lieu thereof by the supplier. Supplier is director here. Is he issuing an invoice or is he mandated by the law, or can actually provision of GST law tell the director to actually raise the invoice? To my understanding, somebody who is not a taxable person, who is not an assessee under the provisions of the Act, provisions of GST law would not be applicable to him. Is he issuing any other document in lieu of the invoice? If at all there is any such document which surfaces, then probably 3B would come. But both the examples which I gave in respect of renting, in respect of services given by director to the company free of cost, in that case, if there is no document as such which is being issued, 3B would also fail. Then come to proviso. Provided that where it is not possible to determine the time of supply under clause A or clause B, the time of supply shall be date of entry in the books of account of the recipient of supply. And that's where probably, if at all this transaction has to be taxable, the proviso would kick in. And only when the company makes entry in the books of account in respect of that particular transaction, then the time of supply would arise as per the proviso to 13.3. Now, all of us understand that, because all of us are chartered accountant, that in my books of account, I would only make entries in respect of a real transaction. If I'm actually not required to make any payment to the supplier, I would not make any provision of any sort whatsoever. In fact, in case of deemed supplies also, where we are required to pay tax either under forward charge or reverse charge by virtue of Schedule 2, what we generally do is we record the transaction and reverse it immediately because we want to book the transaction for the purpose of GST. But from accounting perspective, that transaction is nowhere reflected in our financial statements. So till the time, what I am trying to bring out in respect of all these influenced relationships where the value is to be determined, and if say the tax has to be paid under reverse charge, till the time entry is not made by the recipient in the books of account, 13.3 would not come into picture. And because 13.3 would not come into picture, whatever levy, if I am saying, was there in still 9.1, the levy would remain intact, but I would never be asked, I can never be compelled by the law to actually make payment of tax. This argument I took in respect of telling to the lower authorities that in case when this circular in respect of personal guarantee had not come, so where regarding all other arguments which were given that in respect of personal guarantee given by the director of the company, tax is not payable, I took this argument by saying, okay, I agree, let's say tax is payable, I agree to whatever deemed valuation you're bringing to me, but let the time of supply arise. When the time of supply will arise, as in when the company will make entry in respect of the transaction books of account, the company will pay tax under reverse charge. To my acute surprise, the lower authorities agreed to this view. And they said, you are absolutely right in this case to say 13.3 proviso would kick in there. And that's where they say demand would not sustain in the year where department is trying to levy the tax in whatever year when the guarantee is given. They said only when the entry is made in the books of account. So probably this can be one of the ways to looking at it, where somebody in respect of director company relationships or wherever reverse charge liability is there, but the valuation is not possible. This is different from case 1. That's what I was trying to explain. Case 1, levy was failing, where we were unable to identify who is the person who is liable to pay tax. This case 2, levy is not failing. Levy is intact. It is there. All boxes of 9.1 are satisfied. But at what point of time I have to pay tax, that is not getting clearer. Or even if that is getting clearer, law cannot force me to actually prepone that, make an entry in my books of account, and then pay tax accordingly. If anybody has a different view to what I have explained, probably something to add to it, or maybe a better view, you're most welcome to actually pitch in.
We'll just change in the context of the new circular on personal guarantee and all. Because
Now,
I-
yeah, right.
Yeah, because now I think the liability comes moment the agreement is signed and but then there is another confusion. Of course, I don't know whether it's within the syllabus or not. That RBI circular where he says the RBI says you can't charge any commission for bank guarantee.
Correct. So now what I understand, sir, in respect of personal guarantee, the circular is absolutely clear. It says at least in case of it, guarantee is given by the directors because there is a specific restriction. By reference to the RBI circular, they're saying no tax is liable to be paid under reverse charge because the open market value or the consideration in that regard is zero. Because there is a statutory restriction coming from the other laws which are applicable in India. So at least in case of personal guarantee, what I understand now the issue is settled. They are saying the consideration is zero, and because consideration is zero, you need not look at anything else. I was referring to that before this circular, the tax authorities at least understood this view from the perspective of time of supply. Apart now, this whatever case study we are discussing, what I understand would be helpful where somebody took a view just now by saying that even if because it is given by the landlord director as a landlord in the personal capacity, the provision of Schedule 2 would not be applicable. My personal view, it would be very difficult to argue that because clearly it looks like prima facie, looking at the transaction, that price was actually influenced because of the relationship, though it might have been given in a personal capacity. There, in that case, you would actually have to go to Schedule. You have to go to Schedule 2, go to valuation rules. Once you will have a value, probably there again, one can take a view by saying still I would not be liable to pay tax because proviso to 13.3 would be helpful to me because I have not made entry in my books. So that's the point probably one can, from this perspective.
Yes,
Just
may
I
I?
would like to ask a basic question.
Yes,
Yeah.
madam.
Yeah, see, when we say that 13.3 is not applicable, just by going by the basic principles of accounting, when you are doing it on accrual basis, when there is a due, or you have to, it is necessary for you to make some provision for expenses.
No, sorry, ma'am, I'm
because-
interrupting. Sorry. What I'm saying is,
Huh.
I will only make due entry when it is actually due.
Correct.
We are looking at those transactions where we have a deemed valuation coming from provisions of Rule 28, where actually there is a supply without consideration between two related parties. So actually there is no payment required between the related parties for that particular transaction. But by virtue of the deeming fiction we have under the GST law, I have to pay tax. There I am saying 13.3 proviso would come in because I do not have to make actual payment to anybody. I would not be required to make entries in my books of account. Now if I have said something to probably if you were saying something else, you may please continue. I was just setting the giving the background to what I was explaining.
No, by deeming fiction, if any tax needs to be paid, forget about the actual payment to the vendor or supplier or whatever it may be. By deeming fiction, if any tax is liable, is it not the necessary for the company to record it in the books of accounts?
So what I understand, correct. So what I understand, in my financial books, I am required to only record the tax portion.
Correct.
I'm not required to record the taxable value. Correct?
Correct.
I will only record the tax portion when I'm required to pay the tax to the government in that particular month, wherever when I have to make the payment. As per the provisions, I have to make payment when the time of supply arises. Time of supply as per 13.3 arises in this case only when the entry is made in the books of account. Now, if the entry for original transaction is not made in the books of account, my time of supply is not arising. When my time of supply is not arising, why would I make entry in my books of account for payment of tax? That's what I'm explaining.
Okay. Yeah, I agree with you.
Yes, Chief.
Good sir has some question. Yeah.
Yes.
Yes, in case of the deeming supply, we are not into forward charge or reverse charge. My query is only limited to this extent that in case of deemed supply, is the supplier supposed to raise an invoice, or he is not raised to invoice? Are the invoice provisions applicable or not?
If he is liable to pay tax under forward charge, he is required to compulsorily raise the invoice under
Even when the payment is not being received.
Yes, absolutely, because that's a tax invoice under GST. It's not a commercial invoice which can be enforced under the provisions of Contract Act to say that this is a due amount, but it is a tax invoice under GST. And because then in that case, he has to follow the procedure given under Rule 46. And Rule 46 says that I have to compulsorily mention the taxable value. Hence, he is required to raise the tax invoice. He may, for the purpose of his, what I understand, for his understanding, he may write to the supplier, to the recipient by saying, you are not required to make payment of this particular invoice because the value is as per the provisions of whatever Rule 28 and that's not only for the purpose of discharging GST. If he is registered also in GST and the tax is payable under reverse charge, then in that case also is compulsorily required to raise the invoice and then write at the bottom of it, the tax on this is payable under reverse charge. That's what the provision of Rule 46 is.
Okay. Now, what about 31(3)(f) then?
31(3)(f) is applicable where the supplier is unregistered.
Yeah, so in this case, will that not apply? And once
that's what I was
the
explaining.
registered person will raise an invoice, then the 13(3)(b) will come into play.
I absolutely. So my case study was where the director is unregistered. You're absolutely right, sir. If the director is registered, then there is a problem. I am not denying that fact. But if the director is unregistered, there in that case, I'm saying I have benefit of provision. Or any supplier who is unregistered and I have to pay tax under reverse charge and the value is influenced.
No, value is as per the value provisions. You were talking about the time of supply. That is the query, na? That when is the time of supply? So in time of supply, 13(3)(b) says the time of supply, date of issue of invoice. So if that invoice is raised by the recipient, registered recipient, by 31(3)(f).
Okay. Acha, now I got your question. Okay, so the answer to that is 13(3)(b) specifically say that invoice has to be issued by the supplier. Then only 13(3)(b).
Does it say that?
Yeah, it says date immediately following 60 days from the date of issue of invoice or any other document by whatever name called in lieu thereof by the supplier. It clearly says by the supplier.
Okay, yeah. Okay. If we say the by the supplier is applicable to both the things, any document or date of issue of invoice, to both these things, the by the supplier is applicable, then okay. Yeah, fine.
Sir, can it be argued that once this reverse charge applies, all the provisions which are applicable to the supplier will apply to the recipient as though he is the supplier? So in that context, can self-invoice be treated as a document which is issued in lieu thereof by the supplier?
Right. So to answer to that is there in the part 1 of this discussion, which all of us had, where at least the majority view was that in case of a reverse charge, recipient does not become the supplier. He only becomes the person who is liable to pay tax in this case, but he cannot be treated as supplier. In fact, the reference to the point which you have raised, reference to that, when you would look at 9(5), sir, in respect of electronic commerce operator, they clearly say that wherever electronic commerce operator has to pay tax under 9(5), he is treated as a supplier as if he has made the supply. So 9(3) and 9(5), that's the clear distinction there. Whosoever is required to pay tax under by virtue of 9(5), he is by the provisions of the law deemed to be a supplier. Whereas under 9(3), whosoever is required to pay tax, the provisions of law does not deem him to be a supplier. And that's why, in my view, this recipient cannot be read as a supplier in context of 13(3)(b).
Sir, like my point is not deeming the recipient as the supplier. The issue is the provisions of the act which apply on the recipient would apply on the person, which applies on the supplier would apply on the person who's liable to pay reverse charge tax. See, in 9 subsection 3, all provisions of this act shall apply to such recipient as he is the person liable for paying the tax.
Correct.
So now in this context, if we say that the self invoice which is supposed to be issued by the supplier in this case. So will that, can we link this 9 subsection 3 provision to there in section 13 where it says document to be issued by the suppliers?
My understanding would be little different here, sir, because we have meaning of word supplier also given under section 2, definition rather. And because there is a clear distinction, the manner in which 9(3) is written and the manner in which the definition of reverse charge is there in section 2, all of them treat recipient to be person who is liable to pay tax, but they do not deem it to be supplier in my view. Hence, whatever provisions are applicable in respect of a person who is liable to pay tax, only that would be there. Why am I saying this here is, just now we had this discussion, if let's say supplier is registered then, and let's say tax is payable under reverse charge, whether supplier will still issue an invoice. The answer is yes, supplier will issue an invoice by virtue of section 31. So there in that case, if one would take a view by saying, then it will become a very contradictory situation. If I read that supplier in context of, if I read that recipient as a supplier in 13(3)(b), and let's say supplier is registered, then I will have one invoice issued by the supplier under 31(1) or 31(2), and I will have one invoice issued by the receiver under 13(3)(f). Then which invoice should I refer while referring to 13(3)(b)? That will create a confusion here. I hope I am able to make my point clear.
Yes.
But in case where, yes.
Can I, or is somebody?
Yeah, please, sir. Please.
Your voice is feeble.
So, yes, coming to the 13(3) proviso, where we're talking the time of supply, if it is not possible to be determined under clause A or B, it will be the date of entry in the books of account of the recipient of supply.
Correct.
So, section 35 mandates that the recipient would record each and every inward supply.
Correct.
So if the inward supply, even if it is a deeming supply, has it to be recorded in books of account, then this will come into play, or we can say, can we say that it is not to be recorded in books of account?
No, I am saying it has to be recorded in the books of account, but when it has to be recorded in the books of account, law does not give us that guidance. I am not denying it. I am not saying that I will not record it. I am saying I will record it, but when it has to be recorded, that guidance is not coming from the provisions of the law.
No, that guidance will be from books of account are relevant to a period, no? So in
Correct.
that period, the date may be it this month, that month, which month, when, but the time of supply will come into play if the person is complying with
Correct.
that,
So only
books of
last
account
point I will
section
make it.
35.
I got your point. Only last point which I will make here is, you are absolutely right. It has to be with reference to books of account. And how will I record my books of account? For that, I have to actually refer to the accounting standards or accounting provisions which are applicable in India. I am not concealing any transaction here, but I will only record transaction in my books of accounts which as per the provisions which are applicable, the statutory provisions which are applicable to me. I have to record an inward supply when, till the time law would not tell me I am not doing anything wrong or any contraventions of the provisions of the Act. That is one point of view here. If otherwise, if let's say I have to record, then all of us are free to record at whatever point of time. When I receive the service, when the service is completed, when the service starts, at the year end, making a provision.
It is not about the financial accounts. If I'm writing in financial accounts, then it is the principles of accounting.
Right.
What the section 35 mandates the registered person is to keep a record of inward and outward supply. So it could be a separate register itself that will be a account of inward and outward supplies. It is not necessarily the financial account.
And will that be my books of account?
Yeah, that is what section 35 says.
Yeah. So
Well,
yes,
we can argue
yes.
both ways, but I'm just bringing to the attention that before we say that time of supply is
Point taken, sir.
so those
Point taken.
can be. I'm just that we should keep that in mind. Let's not come to a conclusion, but just
Yeah.
Right.
Yeah, I think this is a wonderful point that Gurjit sir shared about section 35, which he has brought in here.
Right.
So, but yes, as you have 2 more case studies to discuss and about
Right. I'll
28 minutes left. So I think we'll go on to case study 3. And case study 3 we'll discuss till 9:45. And from 9:45 to 10 we'll discuss case study 4.
Right. So case study 3 again, all controversial issues I've picked only to test how much water is there. Now, very simple question. in case of works contract, let's say we have a definition of works contract. We have 14 activities which are mentioned in respect of a works contract. All these 14 types of activities are mentioned: building, construction, fabrication, completion, and so on and so forth. My question is, if let's say I have to, we all of us know that the rate of tax which is applicable on works contract services generally is 18%. My question is, how would I look at it while reading the rate notification? Because there has to be some manner of reading a rate notification, and from where I would find it out. Just in case, what I would show on the screen, if anybody has a contrary view to this, you may please bring it right now. What I understand, all of us, in respect of works contract, when we say the rate of tax which is applicable is 18%, it is covered in this serial number 2, and then I would go to this Roman 12 under construction services, and it says construction services other than IE, IA, IB, IC, ID, IE, IF, 7, 8, 10, and 11 above, and it says 9%, and similar provision is there in RGST or SGST, and I would make it together and make it 18%. And from that's where I understand under HSN code 9954, we say works contract is there with 18% rate of tax. If I have to look at exactly rate notification 11/17, I would go to this number 12. Okay. Okay. Now, in this case, if I hope all of us are on this view. If in case or any of us are of the view that no works contract is classifiable anywhere in notification number 11, then probably we can have a different discussion for this. But for the context, I'm setting it here. Now, when we say this, what I understand, let's for the timing read how notification 11/17 is worded. Okay. So this is 11/17. First 4 line refers to all the provisions under which basically this notification has been issued. 9.1 is also referred here, 11.1 is referred here, 15.5, and all of that is mentioned. Now, the words which are underlined here are of relevance to the discussion which I want to bring here. It says, on the recommendation of the council and on being satisfied that it is necessary in the public interest to do, hereby notifies that central tax on intrastate supply of services of description as specified in column 3 of table below. So of supply of services of description as specified in column 3 of table below, falling under chapter, section and heading of the scheme of classification of services as specified in column 2, shall be levied at the rate as specified in corresponding entry to column 4, subject to the conditions as specified in corresponding entry to column 5 of the said notification. So the chronology, one would look at it, it says the description of the service, first read that in column 3, then try to find out under which chapter, section and heading it is classified in column 2, then look at the rate at column 4, and when you look at the rate, also look at the relevant condition if at all it is there in column 5, and that's how you will be able to identify that in respect of a supply of a service, this is the applicable rate. So the chronology is identification of a service as to under which specific table or cell of that particular rate notification I have to look at it. The initiation is on the basis of what is mentioned in column 3 and not on the basis of what is mentioned in column 2. Any different point of view on this? So I am saying that a first identification is on the basis of column 3, the description, and then I will go to column 2. Anybody would like to bring any different perspective to this? How to start reading the rate notification or to identify what is going to be the classification? Anybody of the view? No, I will first look at column 2, that is the HSN codes which are mentioned. And then on the basis of HSN code, I will determine what is going to be the rate of tax. Description, whatever is mentioned here, that is only for indicative purpose. At least to my understanding, when I read the this opening paragraph, it says read column 3, then go to column 2, then go to column 5, and then go to column then go to column 4, and then go to column 5. That's how it is mentioned. So identification has to be as per column 3, that is description. Then classification. Once I understand that prima facie my service falls under this specific classification, then I would go to column 2 and identify what is going to be my exact chapter, section, and heading. They have referred in the notification that how would you read chapter, section, and heading. And then after that, I will go to rate and rate notification and the conditions. Okay. So this is as per the general rules of interpretation also. That's what one of the participants is saying. Now, let's try to apply it here. So when I'm looking at a works contract service, then I would look at construction service. Then I would look at construction service, this 12 construction services other than IE, IB, IC. And then I would find, okay, my works contract falls in this construction service. And then I would go to column 2 to identify what is going to be my exact actual classification of this particular service. In fact, if I would go into the details of it, it exactly looks like this. It says, you can for the time being ignore the numbers of the column which are mentioned. Probably one number should not have been here. It is actually annexed to the rate notification. It says all services, then it says construction services under section 5. Then heading 9954 again says construction services. And then if somebody would go further, 9954 it says construction services of building. Now my question is, if let's say I am giving a works contract service and it does not have an element of construction involved in it, then, and it has only an element of fitting out or improvement or modification or renovation. So it is a works contract for improvement of an immovable property where transfer of property is transfer of property in goods involved in execution of such contract. Then how will I read the rate notification? If let's say I am doing modification or let's say improvement or repair, prima facie, whether that falls under this table 3, this table column 3 construction services. That's the first question which probably should come to your mind. When you would go further in the rate notification, one would take a view by saying, why not? It would fall because the construction service is a broader categorization. This section 5, it's a broader categorization. 9954 is still broad in its sense, though it may be a little narrower to what is mentioned in the section, but still the narrower part of that is construction service. And then you read the specific description which is given in column 3, you would specifically have reference of composite supply of works contract as defined in clause 119 of section 2, and then it refers to earthwork. Till the time we did not have amendment till July 2022. We had works contract services specifically given to governmental authorities where differential rates were there. And out of 14 activities of works contract which were mentioned, they did not refer to all 14 activities. Some refer to 6 activities, some refer to 7 activities, some refer to 4 activities. Where you would look at construction of roads. So it only talked about original construction, where you would look at construction of a pipeline, conduct, all of those things. It did not refer to improvement and all those things. So what I'm trying to bring, that yes, at a broader sense, there is construction, a little narrower still construction, specific description, composite supply of works contract is mentioned, meaning thereby works contracts are definitely covered in the construction category. Now works contract as such, when they're covered in the construction category, still legislature or the makers of the notification in their own wisdom, they brought out specific works contract services, reference to specific works contract services with specific rates which they have mentioned. Okay. So again, I am again explaining the mechanism is all services, very broad. In fact, all ambit of all the services under GST are covered in chapter 99. Then section 5, one part of it, construction services, a little narrower ambit. Then heading to it, all a little more narrower. And then we have specific descriptions. Now the problem is in this 12, the description, in some description they refer to works contract. In some description they have referred to construction of residential properties. And in some description they refer to construction services other than IE, IB, IC and all those things. Now the point which would come here is this description which is mentioned in this Roman 2, whether one would read this construction in a broader sense, or one would read this construction services in the narrower sense. That's the point which I'm basically trying to pinpoint here. I'm not giving from my side any specific conclusion to it. But what I'm trying to bring out that there is anomaly here. Why this anomaly is there? Because you read the footnote to notification number 11/17 or explanation rather. What is explanation 2 saying? Explanation 2 saying reference to chapter, section and heading wherever they occur, unless the context otherwise requires, context requires shall mean respectively as chapter, section and heading in the annex scheme of classification of services. Meaning thereby what they're saying is, unless being asked for, if let's say you have to refer to the scheme of classification only when you want to look at what is the reference to chapter, section and heading, and obviously their scope is limited. One big difference when you would read the rate notification in respect of services and rate notification in respect of goods is, in respect of goods, first schedule to Customs Tariff Act 1975 is applicable for interpretation of the whole notification. And I would refer to that once we would go to the end, to the conclusion of this, that it clearly says it is applicable for interpretation of the whole notification. Meaning thereby, whenever you look at the classification of goods under GST, you need not actually really go abide by the description of the goods which is mentioned in the table, but rather the principles which are applicable for determining the classifications which are there in first schedule to customs tariff, they are applicable to the whole notification. In services, it is only applicable for 9988 HSN code, where we have reference to manufacturing of certain goods. So there HSN codes of some certain goods are mentioned. For all other supply of services, this first schedule to custom tariff is not applicable. Then how will one interpret that, how one has to take assistance in classification? So we had this in September 2017 when this annexure to the rate notification came. Regarding these explanatory notes, there was beyond that annexure, we had explanatory notes of how to read the scheme of classification of services. There they mentioned it is modified version of United Nations Central Product Classification. And then they wrote 2-3 specific lines, which is very important in the last paragraph. I will just read it for the benefit of all members. The explanatory notes indicate the scope and coverage of the heading, groups and service codes of the scheme of classification of services. These may be used by the assessee and the tax administration as a guiding tool for classification of services. However, it may be noted that where a service is capable of a differential treatment for any purpose based on its description. Now, these lines are very important. Service is capable of differential treatment for any purpose based on its description. The most specific description shall be preferred over the most general description. Meaning thereby they are saying when you look at any service and you see and you on the basis of a description you say my service does not fall in this description, then in that case, or probably it is a very general description, then in that case you would not take your service to the general description unless you would say that I have a very specific description that could come here. This reference to this you can also find UNCPC rules for interpretation which are there. So the service notification which we have, they have already mentioned, CBIC have mentioned that is modified version of United Nations Central Product Classification. They say whatever explanatory notes are given, they're only for the help. Still, when you would read, what is the rule for reading that explanatory notes or how one would actually look at the explanatory notes? We have para 63 in UNCPC rules for interpretation. There they talk about 3 specific methods. There they say, first of all, look at the most specific description. Second, go to the essential characteristic. And third, they say if all of that is not possible, whatever occurs last in the numerical order, you follow that. So these rules of interpretation are also for column number 2 of the rate notification. This is not for column number 3 of the rate notification because they are trying to interpret that if let's say you identify that your service can possibly it can fall under 2 or more HSN codes or SSC code you may call it, then in that case how will you resolve that conflict would determine on the basis of it, go to specific description in the annexure or go to the essential characteristic test or what comes last. But this is not for interpretation when there is conflict between column number 3, that is description in the rate notification which we have. Now when I bring all of this together, what I try to bring out is what happened in services classification is there has been a merger of 2 things which has happened. What is the merger? In service tax, all of us know who are practicing that the classification was on the basis of description of the service. The classification was not on the basis of what is the HSN code. Whereas under excise and customs, the classification was on the basis of what is the scope of that particular HSN code, chapter heading or section heading. So the section, chapter, tariff items were very important. In service tax, description of service was important. When we bring this under GST, the manner the notification, the starting of the notification is there, it talks about the description of the service being of prime importance for identification and then going to the classification. When I try to apply this to the works contract, where the problem is under works contract, now construction being one of the activities or one of the components of a works contract definition, which you can clearly see here, how would you try to identify by saying that the construction which is mentioned in the rate notification is actually the broader construction in a sense which in its gambit wants to include everything of this works contract? If that being the case, if one takes a view by saying that all the construction activities they intended to cover it here, then in the rate notification 9954, then also legislature in its own wisdom or the makers of the notification in their own wisdom, they have called out specific works contract activities at specific rates, and that residuary whatever has been left has again they mentioned to construction services. Now that construction, whether it would include works contract or not, in my understanding, there is probably the drafting could have been better. The drafting could have been more clearer. They could have mentioned all other types of construction and any other related activities referring to schedule this column number 2. And if that would have been written, it would have been more simpler. Otherwise, on the prima facie reading of it, it looks like it only covers the construction service. Still, one can take a view, okay, even if you, let's say you go by this narrower interpretation, why do you go into that? We have any other service category which is available with us, and in any other service, the rate is 18% applicable. So all the works contract which are not in 9954, they would be covered in entry number 35 of the rate notification, and tax would be payable at 18%. Now there also, in my whatever understanding I could generate by reading all of this, I realize still there is a drafting error there, or probably the manner in which it is drafted is a little different. It says other services, washing, cleaning, dyeing services, beauty, physical well-being, and other miscellaneous services. Other miscellaneous services, including services nowhere else classified. Now the word here is services nowhere else classified. I am saying when you read detailed annexure to the rate notification, works contract is definitely classified under 9954. I am not denying it. But the problem is the rate notification does not tells me to directly go to the HSN codes and identify the classification. It first says identify the most specific description. If the specific description fails there, or specific description actually I get a sense of understanding that my service falls here, then only I will go to the HSN and then I will go to the scheme of classification which is applicable. Last point in this, I would like to bring out, when you compare this with 1/17, one would say that if I take this interpretation, then probably all the rates in respect of goods which are mentioned in 1/17, they would fail, because we have only one word, two words mentioned in the rate notification for goods. There, when you look at 1/17, the starting is almost same. So starting, there is no problem. But what saves 1/17, or what is the reference in 1/17 is explanation number 4, Roman 4. It says, for the purpose of this notification, the rules of interpretation of first schedule to customs tariff 1975, including the section, chapter note, and general explanatory notes of the first schedule shall, so far as may be, apply to interpretation of this notification. And it says clearly for the whole notification, you have to actually refer to what is mentioned in first schedule to customs tariff. The rules of interpretation which are mentioned there, they are for actually interpreting what is the scope of a particular HSN code, what it will include, and what is the descriptions they intend to cover there. So what I'm saying, there is a difference, the manner in which two notifications are written, they are not happily worded. I am not saying that the levy is failing in case of a works contract. I'm definitely not bringing it here to take that bold or a very aggressive statement. But yes, drafting could have been proper. Drafting could have been better. in terms of the way you look at the rate notification, but it becomes very clear that in case of the services description, which is mentioned in column number 3, is of acute importance, and then all other things are ancillary in that particular. This was a point I wanted to bring here. In fact, I am being told that in one of the cases, the levy of works contract has been challenged, and it has been challenged only on the basis of the manner in which it is mentioned in the rate notification. I am again I'm saying that one would look at it. You try and identify it. Every time you try to connect the dots, you would realize somewhere some loophole is missing. Okay. I will first cover now my case study number 4, and then whatever time is left. Sorry, I will have to leave a little early. That's why. But I don't want to say that we'll cover it next time. So I would first try to cover case study number 4, and then whatever time is left for 3 and 4, we'll take it together. Okay, that is okay?
Yeah.
Okay. Case study 4, not actually case study, but trying to actually understanding that when you go to section, we have read section 9 of CGST. Now we come to section 5 of the IGST. 5.1, we're not discussing almost all issues which we have pointed out there. They're already there. Let's go to the proviso. And proviso, whenever we read the proviso, we say that by virtue of proviso to 5.1, the levy of IGST on imports is actually shifted to customs because of this proviso. Probably when I was reading it again and again, I wanted to look at it and read it together with the provisions of customs which are mentioned there. And again, when you would try to find out two things, you look at it. What is the scope of IGST Act? What is the purpose of Customs Act? What is the purpose of actually having additional duties? And then you read the levy which is there in section 3 in respect of IGST, 3.7 specifically under the Customs Tariff Act. And then what is the purpose of this proviso? So 5.1, integrated tax, it is applicable on interstate supplies of goods and services. So interstate supplies of goods and services, IGST is applicable. Proviso, let's read the proviso together first of all. Proviso says, provided that the integrated tax on goods other than the goods as may be notified by the government on the recommendation of the council imported into India. So these words are very important. Imported into India shall be levied and collected in accordance with the provisions of section 3 of the Customs Tariff Act 1975 on the value as determined under the said act at the point when the duties of customs are levied on the said goods under section 12 of the Customs Act 1962. So it says levy is also there, collection is also there, valuation also there, and the point of time at which the tax needs to be paid, that IGST, it is also under the customs. Mind you, it is coming out as a proviso to 5.1. So it is bringing out an exception here. Now, let's read what is mentioned in Customs Act Customs Tariff Act rather 3.7. It says any article which is imported into India, in addition, be liable to integrated tax. Okay, so in addition, be liable to integrated tax as at such rates not exceeding 40% as is leviable under section 5 of the IGST Act on like article on its supply in India on the value of imported articles as determined under subsection 8 or subsection 8A as the case may be. So first point, when you would read 3.7, it says article which is imported into India be liable to integrated tax. The first question which should probably come to our mind is whether this levy under 3.7, it is a tax on goods or it is a duty on goods or it is a duty on supply of goods by way of importation. That's the first question. Because goods are imported into India, whenever they're going to touch the custom frontier, there would be levy of IGST. We are not denying that. But by 3.7, the levy is on the activity of supply of goods by way of import. That means, is supply important here? Or the levy is actually on the articles. If they are imported into India, irrespective it has attributes of supply or not, there would be levy. That's the first confusion which comes here. Why this confusion comes here? Because, or why this confusion is important to address here? Because 5.1 proviso the exception. The exception is to the main levy provision which is there. And under 5.1, levy is on the supply of goods and services which are treated as intrastate supplies. So whatever is an intrastate supply, On that only 5.1 would be applicable. Then the proviso carves out something and say, okay, in respect of goods imported into India, the provisions of customs would be applicable. So is it carving out something from it which is not within the scope of supply, meaning thereby proviso to 5.1 actually exceeds the scope of 5.1 which is there? If one takes that view, probably in my view, if somebody is going to challenge that and look it from the constitutional provision, one would be able to explain it to the courts by saying, no, supply is very important. The first premise has to be on the supply. IGST or any sort of GST, if it has to be there constitutionally, it has to be on the activity of supply. So, and if that being the case, 3.7 of the customs tariff, it does not refer to tax on supply by way of import. It only says any article which is imported in India shall in addition be liable to integrated tax at such rate not exceeding 40%, which is leviable on like article on its supply in India. So meaning thereby probably in 3.7 they do not have reference to supply. That's point number 1. Now when you read 3.7, let's try to compare it what was mentioned in 3.1. 3.1 again customs tariff, it was with reference to the levy of additional duties in respect of excise duty. The language in 3.1 was little different, or it is little different as compared to what is there in 3.7. 3.1 says any article which is imported in India in addition be liable to a duty, hereinafter in this section referred to as the additional duty, equal to excise duty for time being leviable on any article if produced or manufactured in India. And if excise duty on article is leviable at a percentage, then they have reference to whatever is that to the manufacturing activity. This says liable to a duty equal to excise duty. Whereas you read 3.7, it says liable to integrated tax. It does not refer to duty equal to integrated tax which is applicable on supply of goods in India. It only says liable to integrated tax. When you refer to 3.1 under the custom, it says liable to duty equal to excise duty for the timing. So that means there is a difference in terms of the way 3.7 is mentioned and 3.1 is mentioned. If one would like to challenge it at some point of time, they may do that. But for the time being, what I could understand, 3.7 has no reference to the activity of supply. Irrespective, whatever goods are being imported, whether they satisfy the condition of supply or not, if they're touching the custom barrier, the custom frontier, in that case, there would be levy of IGST, which will be there. The question which I am trying to basically address or find an answer to that is, if 3.7 is worded in this manner, was there a requirement to actually have proviso to 5.1? Because if this proviso to 5.1 would not have been there, let's say, can still, if that duty of, let's say this 5.1 proviso was not, then still 3.7 would have been there. Would this levy under 3.7 would have sustained? Let's not go into custom territory. That's not the topic here. But my first understanding is that this proviso is not actually levying a duty or IGST on import of goods to say, because any which way that is under the domain of customs. This proviso is basically talking about something else. Now, what is it talking about, or what is that part of the supply which is being still handed over to customs under the proviso to 5.1? Okay. For that, we have read 3.1. We have compared 3.1 with 3.7. Now, let's go to Section 1 of the IGST Act. Section 1 of the IGST Act says that this act shall be called Integrated Goods and Services Tax Act 2017, and it shall extend to whole of India. That means IGST does not have its boundaries outside India. Number 1. Number 2, I will have to actually rely upon one of the views which I have constantly, at least I am very firm on, that when I read the levy provisions and when I read taxable person at first has to be supplier. It can't be recipient at first. And hence that is why when I would read the levy provision, first of all, I will try to see who is the supplier. If the supplier of any supply is sitting outside India, in my understanding, Section 1 of the IGST Act would say that that supplier can be brought to the provisions of this Act, and hence probably IGST would not be applicable there. That is why specifically, and I think this reference was made by Arpit ji also in the previous session, that is why specifically under Section 7 of the CGST Act 1B, they compulsorily included artificially in the scope of supply import of services for a consideration whether or not in course and furtherance of business. So that was 7(1)(b). Specifically, they had to include it. Otherwise, the levy on import of services would have been challenged. Now that it becomes part of the supply, by virtue of a reverse charge notification, because it becomes within the scope of supply, we have that levy of IGST in case of import of services. However, import of goods, nowhere in scope of supply it is mentioned. So that's one, that the supplier, if it is not in India, probably Section 1 of the IGST Act will not take care of. Now we have definition of import of goods. Import of goods, which is mentioned in Section 2, it says import of goods with its grammatical variation and cognate expression means bringing goods into India from a place outside India. That's the definition which all of us understand. It is basically talking about an activity of bringing goods from outside India to India. It's an activity which is being explained as import of goods. 7(2).
Yes, I'll just interject here.
Yes. Yes, sir.
5 minutes. We also have RPG.
Yeah.
So,
I'll just complete in 3 to 4 minutes. Not more.
Yeah.
Then we have 7(2) of the IGST Act. 7(2) of the IGST Act says supply of goods imported into territory of India. Now this is important. After that, you read, till they cross the custom frontiers of India shall be treated to be supply of goods in course of interstate trade and commerce. That means for treating something as interstate trade and commerce, import of goods till the time they're not basically clearing the custom frontiers, that activity has been treated as an interstate trade and commerce. Think about an activity, some goods which are coming from outside India, not touching the custom frontiers, still under 7(2), which determines the scope of interstate trade and commerce. They compulsorily wanted to include it here and explain that this will be treated as interstate trade and commerce. But in respect of goods which have already been imported, cross the custom frontiers, whether that activity of import of goods is an interstate trade and commerce or not, that is silent, that is not mentioned in 7(2). Why? Because when you read 7(2), with meaning of import of goods and with Section 1 of IGST Act, one view is that under IGST 5(1), levies on interstate supply of goods and services on a taxable person, IGST is only applicable within the boundaries of India, and where taxable person at first has to be in India. If it is not in India, probably in my understanding, it could not come within the ambit of IGST Act only. That is why they had to specifically in respect where all the transactions which were beyond the custom frontiers, but supplier was in India. They first of all, they explained it to be under 7(2) as an interstate supply of goods and services. And then you read under Section 2 of the Customs Act, 225 of the Customs Act, what is the definition of imported goods? Imported goods means any goods brought into India from a place outside India, but does not include goods which have been cleared for home consumption, and that's very important. Under custom, all the goods which do not clear the custom frontiers, they are treated as imported goods. That means under the proviso to 5(1), what I understand, government is not actually trying to say that on activity of import of goods, when they at the time of filing a bill of entry, they want to levy IGST and they are transferring it to customs. Any which way, that to my understanding, that was not within the periphery of the IGST Act, that was any which way under the Customs Act. Through proviso, all inbound transfers, all high sea sale, all out and out transactions where supplier was sitting in India, that proviso only actually transfers the levy to the Customs Act. And that is why you will see that in all these three types of transactions, actual levy arises only when the goods are crossing the custom frontier. That means when we are paying IGST at the time of import of goods. As a matter of precaution, that is why in all Schedule 3, you will find reference to all these three transactions. Government also in its document actually realized this. So when I raised this question in the case study yesterday, that tax on import of lease, the problem what happens in case of lease, when the goods are coming from outside India for purpose of lease in India, they are paying customs duty, and also we are treating it as an import of service and we're paying tax under reverse charge. Government, when this GST came in, they were also very confused that whether in respect of import, is there anything which is available under the GST Act only or not? Best example which came where they wanted to give an exemption to the SEZ units in respect of imports. They first brought an exemption notification under IGST. they withdrew that exemption. Then again, they brought an exemption notification on the Customs Act. And then they brought a separate exemption notification for import of services under IGST. That means they realized the mistake that under the IGST, not because that proviso takes it away, but because any which way in respect of import activity, IGST has no power at all, but only where supplier is sitting in India and goods have not the custom frontier. Only to that extent power is there. 7.2 refers it to be an interstate supply. But now, because that reference by virtue of proviso, it has been transferred to Customs Act, only when the bill of entry is filed, tax can be levied. Otherwise, no power is there under the customs. So that's an important point to understand, that generally we are of this understanding that import of goods, the power was there under IGST and it has been given to customs. Maybe another view to that would be that it had no reference to IGST at all, and that is why tomorrow somebody would say, I'm importing some material as a gift. Why should I pay IGST? Because there is no supply there. Because customs has no reference or no levy on the supply. It is actually applicable in respect of import of goods. Whether it is by way of a supply or by way of a gift or otherwise, it doesn't matter. The levy of custom would always be there. Sorry, I've overshot my times. I have not taken the questions also, but I wanted to basically explain this concept, whatever understanding I have. If anything, somebody would have a different view, probably I would take it offline.
Yeah. So Yassi, I would first of all like to, really thank you. Matlab, hota hai na ki hum log, we look at the YouTube shorts and we know that, we are addictive to it and still we are watching it. Your session is like that. We know that you have a flight to catch, but, we can't still leave you. We just love listening to you and we would love to listen to you, but we also want you to catch the flight. So that is also important. And also the case studies and the deliberations that you have done on the discussion about reading of the rate notification and also about about the import provisions that we have shared with us. I think these are really thought-provoking. And apart from this, one more takeaway from today's session would be about the booking of the invoices in case of, where the person is unregistered supplier. I think that's also another interesting perspective that we can look into. So thank you once again for, taking us through, section 9, 2.0. The second version. So, and after today we'll be staying in Rajasthan only, but only thing we are from Jaipur, now we are traveling to Jodhpur, and now we'll be going to SCN 2.0 to Arpitji. So thank you very much, and I think we'll get you again as a resource person or a speaker in the days to come. So we'll have that discussion. Thank you very much.
Thank you.
So yeah. So with the wonderful session that Arpitji, Yashji has just gifted us, and the deliberation, I know we have been writing a lot of things to understand. We have been writing a lot of things to take note of the points of view. I think that is really important. So with this, now we will. Yeah. So Vivekji says he's a gem. Yes. In fact, I would say share that we are really fortunate that by God's grace we have all the gems in our faculty group. And, so that's one wonderful thing that we have. So with this, we will quickly go over to Jodhpur now, where CA Dr. Arpit Haldia ji is waiting for us. Arpit ji, you can share your presentation. You can check once. I made you a co-host. Yeah. So Arpit ji also does not need any further introduction. He's been admin of the group. He's been constantly discussing many issues with us, and we love also listening to him. So Arpit ji, without further ado, I think I'll just transfer the mic to you. Over to you for the discussions on show cause notices. Like, we have received the show cause notices, but now what would be the next step? That was the FAQs that we got from, and these are all the questions that we have got from the members, which Arpit ji is addressing to. And so over to you, Arpit ji.
Thank you, Rugi. And after a power packed session from Yash on various issues and the brainstorming which he had done in the last 1 hour, we will be following up with the show cause notices. And as always it happens that taxpayer makes an interpretation and it is followed by show cause notice. So the interpretation which was made by Yash is now being followed by the show cause notice. And we have 15 queries, and with the time permitting, we will try to cover those queries. So coming to query number 5, which we had done up to query number 4 previously. So query number 5 is invoice is dated 1st July 2017. 180 days expired on 28th of December 2017. Payment has not been made till date. Can the SCN be issued for this reversal after 30th of September 2023, or the case is time barred? So if we go through, in my opinion, the relevant part for this would be the definition. If I had covered, I had not covered the definition of suppression, which is there in section 74. I would like to take it separately. So this is the definition of suppression which has been given in explanation 2 to section 74. For the purpose of this act, the expression suppression shall mean non-declaration of facts or information which a taxable person is required to declare in the return, statement or report or any other document furnished under this act or the rules made thereunder, or failure to furnish any information on being asked for in writing by the proper officer. So the query is that I was required to reverse the ITC. On 28th of December 2017, I failed to reverse the ITC and the payment has not been made till date. Can section 74 be invoked in such case? In my opinion, it can be invoked, and the house is open for the views of the members. Are there any views, any different or any observation which is coming to the mind of the participants?
You're saying section 74 or 73?
74. Because the time limit for 1718 is expired on 30th of September. So now the question is, can the notice be issued under section 74?
Talks about suppression and all that, no?
Yes.
Yeah, it can be.
Now let's twist a question a little bit and then we will be moving on to the next question. Supposedly, the payment was, in the given question, the payment was not made. Supposedly, the later on the payment has been made after 2 years. Now the question is, can notice be issued under section 74? As on this date, there is no tax required to be paid because the payment has already been made. Can the department invoke section 74, treating that the tax has already been appropriated, but interest and penalty is required to be paid?
RPG, in my view, suppression charge cannot be made in this case because there is no provision in the law to make me a declaration about all the payment to be made. Since there is no declaration, there is no suppression because I have not violated any information which is required to be submitted.
Nilesh, I was required to show the reversal of ITC of one for non-payment of tax within 180 days. So whether that will not form in the scope of non-declaration of facts or information which is required to be declared in the return. Now, at present, we are required to show it in 4B2 in GSTR 3B.
Yeah, I agree with that part, but there is a payment declaration I am not required to be made anywhere.
No, reversal, that is the reversal requirement.
Okay.
RPG.
Yes, sir.
RPG, in that case, I was required to reverse that amount. Okay.
Yes.
After 180 days, I was required to reverse that amount, which I have not reversed. That's there. What? Suppression cannot be alleged against me because then I have not done that my duty, you know. I was not required to declare anything regarding the payment. That is a fault. That is, I have not paid the tax.
No, that unpaid tax cannot be taken by issuing a show cause notice by alleging missuppression. That is the point, sir. Please.
No, that I had not paid the consideration. I was required to reverse the ITC in the return for the month of December 17. And while filing December 17, I did not reverse the ITC, and neither I showed any amount. So can that be treated as suppression?
Because I did not pay that tax. I did not pay that. I have not paid many taxes which are covered by 73, but not by 74. They are in my books of accounts. They are all declared that ITC. So department was not able to audit my accounts, or he was not able, because here also, whenever department comes to audit, when they will find that I have not paid the taxes, they will ask me. Then they will ask me. So Uniji is, I think, right. It's my opinion also that this suppression of, because I am not bound to declare anything regarding the payment of that amount or not. And I may be having that is because, there are certain other school of thoughts also, which says that payment due is not 180 days payment. My payment was not due. So that school of thought is also there, sir. So I think their suppression cannot be there, sir. It's my humble opinion.
Hello.
Yes, Vivek.
Yes, sir. Sir, now assuming that even there is non-declaration, but where is that non-declaration to evade tax? Because suppression is read together along with suppression to evade tax, right?
Yes.
So assuming even if this non-declaration amounts to suppression, can we tell that the suppression is to evade taxes?
So now we are moving to a next part of this query, that mere declares. There is one Supreme Court judgment also on the part that not every declaration would be treated as with an intent to evade. Supposedly, I think that a particular thing is exempted from levy of tax. Now, since I have a belief that the levy is exempted, the supply is exempted from levy of tax, and therefore I did not show it in the taxable column. Now the question is that how is my submission? Whether my submission is based on an interpretation, or whether my submission is not backed by a particular interpretation. So if there is an interpretation challenging the legal aspect, because I had not thought it, I thought it to be challenged before a court, that provision for reversal under 180 days is a illegal and ultra vires provision. Then in such case, yes, I can contend it. But if I do not have a submission or a challenge to the legal provision, because then it would not include any interpretation part, then in that case it might fall within the ambit of evade to tax.
No, sir. In our example, what was taken, it is only appropriation, right? So when tax was already paid, where is the question of evasion of tax? In our example, what you had mentioned that before the notice came, tax was paid. So in this notice of 74, tax paid is appropriated and interest is being demanded.
And Arpit sir, one more point, just to add him, because section 74 says that the proper officer shall serve the notice on the person chargeable with tax, which has not been so paid or so and so. So the point is, if the tax is not due, in that case, the show cause notice cannot be issued. So the notice can only be issued when the tax is not paid. If it is paid, there should, I mean to say, before serving the notice, if the tax has been duly paid, this section 74 cannot be applicable on it.
Yes, Vijay, we have kept this question that whether mere payment of tax without the payment of interest, can it be said that tax has not been paid, or whether it would be that tax has been paid but only interest has not been paid. So summarizing this point of reversal, so summarizing this point of 180 days, the original set of query was that 180 days expired on 28th of December and payment has not been made till date. Can it be said that notice can be issued under section 74 or it can only be issued under section 73. Prima facie, it might fall within section 74, but yes, if we can highlight that it is backed by the point of interpretation, then in such case, the invocation of section 74 can also be challenged. Secondly, if altering the query that supposedly the amount has already been paid. Now the question is, since the tax has been appropriated and only interest and penalty is required to be paid, can the notice be issued under section 74? This we will keep for a subsequent query when we will discuss that whether mere payment of tax without payment of interest can be treated as the tax has been paid and no notice under section 74 can be issued. Now coming to the next query, query 6. Audit initiated for 17-18, audit report given with say 2A versus 3B difference. DRC 1A issued by the audit authority on 25th September 2023. Reply filed, issue dropped, no SCN issued by the audit authority. Jurisdictional proper officer issues SCN on 29th of September 2023 for 2A versus 3B. Query: for an issue dropped in DRC 1A by audit authority, can jurisdictional proper officer give SCN on the same issue?
Arpit sir.
Yes.
Yeah, I'm really sorry to interrupt, sir. Sir, in query number 5, the question was, sir, the invoice is dated 1st of July 2017. 180 days is expiring on 28th of December 2017, and payment is not made till date. So, can the SCN be issued for reversal after 30th September? This question is regarding now whether this liability pertains to 17-18. Or since the payment is not made till date, can the liability be traced that it pertains to financial year 23-24? So if it is, the liability is pertaining to 17-18, and assuming there's no suppression, and even if the department is agreeing on that count, so can a show cause notice be issued considering financial year 23-24 because payment is not made till date? So to which financial year will this notice pertain to?
See, Praveenji, in my opinion, if we read through section 73-74, it says ITC wrongly availed or wrongly utilized. So the day on which the 181st day came, my ITC became ITC wrongly availed or wrongly utilized. So that in that case, on 181st day, that ITC was liable to be reversed in the return for the respective period. So in my opinion, it would be for 17-18. It would not be for the current year, because in that case, the limitation will never expire, considering supposedly if the payment is never made for the next 50 years.
Thank you, sir.
So coming to query 6, whether DRC 1A has been issued, dropped, now can the jurisdiction officer issue another SCN for the same query?
Sir, in my opinion, he can, sir, but he cannot invoke the extended period. 74 cannot be invoked, 73 can be.
For query 6, Padmanabhan?
Query 6, sir, query 6.
Okay. So one of the view is that he can invoke, but section 74 cannot be invoked. It has to be under section 73. Any other views?
Sir, I'm also not considering 6-2 or cross. The central officer cannot raise a point where state has already. I'm not touching upon that, assuming it is by the same department.
Same. It is from the same. Section 6 has no applicability on this issue.
Arpit sir, I have already received the same notice for 6 years from 5 years from 17-18 to 22-23. Proceedings dropped under inspections and audit. And now I've received notices exactly same situation for me. I'm going on Tuesday to make a representation for this case.
So we are good at what we can say foretelling. Yes. Any other views from the members? See,
and the fun part is the same officer only has issued the same notice.
Okay.
The officer even hasn't changed.
Great. So the litigation will never end. They have the motto that we will never end the
litigation.
Exactly. But once a matter has been disposed of, can the jurisdictional officer issue an SCN? I think that basically that SCN is faulty.
Sir, in my opinion, expressing my views. Query 6, different opinions might be there, and this entire session of SCN is gathering views from the members, not for concluding the query, but what are the different views of the members. So in my opinion, once the issue has been dealt with and it has been closed, because the officer has formed his opinion that there is no longer any ambiguity or any further proceedings to be carried on. That is the opinion which has been formed, and once an opinion has been formed, it can no longer be reopened in under the same section or a different section, barring section 108, which is for review of the order by the commissioner. And if we go through the instructions which have been issued by Delhi SGST recently on 31st of October, which also are on the same lines that once an issue has been concluded in the audit or by way of issue of ASMT 12, no notice for same matter shall be issued under DRC 01 by the jurisdictional officer. So in my opinion, not only because of the instruction issued by Delhi SGST, but looking to the provision of section 108, because if that is allowed, then section 108 loses the very reason for incorporation under the GST statute. So in my opinion, this SCN cannot be issued again once it has been dropped under DRC 1.
Sir, Girish this side. Sorry to interrupt. One small point. If the order is passed by the adjudicating officer mentioning that a fresh show cause notice will be again issued for the same issue, can the newly issued show cause notice be considered as a valid show cause notice?
Girish, order cannot be passed. The show cause issued notice, show cause notice issued earlier can be dropped and a fresh notice can be issued.
So that is a valid one.
Yes, yes. If the earlier show cause notice has been dropped and the new show cause notice has been issued because a certain fact or a new information has come, then the new show cause notice can be issued, but that would be subject to the fresh limitation, if any it is there.
Thank you, sir.
Sir, Gaurav here, I had a question here. If a particular thing, a show cause has been done and a DRC 7 has been issued, maybe at least 1 year back.
Yeah, your voice is breaking. It is not coming.
So now is it clear?
Yes.
Yeah, sir, I had a question here. A particular matter, DRC 1 was issued for 3B2A difference, wherein the alleged tax was issued by way of a show cause and then confirmed in DRC 7. They never charged penalty in the earlier order. The dealer has already gone for an appeal. It is still pending adjudication. It is still pending disposal at the appeal stage. Now, a fresh SCN only for the penalty has been received for 30th September. So, is that valid?
See, if the penalty has not been charged in the order also, then in my opinion, once the order has been issued and penalty has whether the levy of penalty was there in the show cause notice.
No, it was not.
It was not there in the show cause notice, so therefore it cannot be also in the order also. If at all it can be done either through 108 or a filing of a cross appeal under section 1072.
So the department is still.
But in that case also, it would again be challenged that the earlier show cause notice was not containing any provision or any allegation for levy of penalty.
Right. So the fresh show cause notice is invalid, sir?
No, it cannot be issued. And recently, a Rajasthan High Court judgment which was given only on 31st of October 2023, wherein the appellate authority rejected the refund on a fresh ground which was not there in the order of the adjudicating authority. The Rajasthan High Court specifically said that once a matter is not before the matter has not been raised by the adjudicating authority in the order, a fresh ground cannot be taken by the appellate authority. Yes, that is subject to 107(11), wherein a different view is there with respect to section 1011 vis-a-vis section 5 subsection 4. That dispute is there unresolved. But yes, we can take the benefit of the decision of Rajasthan High Court if at all a penalty is sought to be levied by the appellate authority.
Thank you, sir. Thank you so much.
In this case, in the question just which was being discussed, under section 127, a show cause notice cannot be issued for penalty separately, sir?
See, section 127, there is a query, Praveen, that we will take along with that.
Okay, thank you.
Arpit ji.
Yes, sir.
Regarding this query 6, regarding audit, you were saying 108. 108 covers decision or order. Can we say that audit report is a decision? It is definitely not an order.
In this case, what has happened is that DRC 1A was issued. DRC 1A was issued, and if we go through the entire process, DRC 1A has been dropped by issuance of an order.
Okay, fine. Yeah.
Now coming to query 7. Output service provider providing taxable services, estimated liability for 4 years is 1 crore. He pays 40 lakh tax, 4 lakhs, 40 lakhs as tax, 4 lakhs is 74.5 and 15 as interest. Let's assume actual interest is 20 lakh rupees. How would SCN propose demand in light of section 74.7? For reference to section 74.7, this is the relevant provision. Where the proper officer is of the opinion that the amount paid under subsection 5 falls short of the amount actually payable, he shall proceed to issue the notice as provided for in subsection 1 in respect of such amount which falls short of the amount actually payable. Now, if we go to the query again, the query is that the actual amount which was to be paid was 1 crore rupees. He paid 40 lakh rupees as tax, and if 40 lakh as tax was to be paid, the appropriate penalty would have been 6 lakh rupees. But he only paid 4 lakh rupees. And he paid an interest of 15 lakh rupees, wherein the actual interest was 20 lakh rupees on that 40 lakh rupees. So how would the amount which is left to be paid as per section 74.7 would be arrived? Before going on to query 7, let's take the query 8, then we will go to query 7. Because I guess query 8 please is coming prior to query 7 in the order of discussion. Can penalty be levied for non-payment or short payment of interest under section 73? So let's take an example that I have a tax of say 100 rupees. I have an interest of 10 rupees. I receive a DRC 01. I pay the tax, or supposedly I paid the tax earlier than DRC 01. Supposedly I paid, there was a tax of 100 rupees, interest of 10 rupees. While filing the annual return, I paid the entire tax. And now only interest is required to be paid. Can penalty be levied for non-payment or short payment of interest under section 73? In this case, how the SCN would be issued? The SCN would be issued that 100 is the tax, 10 rupees is the interest. The 100 rupees tax which has already been paid is appropriated towards the tax. Now only interest is to be paid, and if the amount is not paid within 30 days, can 10% of rupees 100 penalty can be levied under section 73?
In my view, yes, penalty can be levied because the section talks about tax and interest thereon. So if you are not paid the interest, you are not fulfilled the condition. So the show cause notice can be issued for the penalty.
And along with that, the penalty and interest. So penalty and interest would only be asked, not the tax.
Yes.
Can we link it with section 75.12? Now, just let me share section 75.12.
I was going to ask you to share.
Yes, I knew that this is one of the burning issues. Section 75.12. Now, section 75 says, notwithstanding anything contained in section 73 or 74, where any amount of self-assessed tax in accordance with the return furnished under section 39 remains unpaid, either wholly or partly, or any amount of interest payable on such tax remains unpaid, the same shall be recovered under the provision of section 79. For the purpose of this subsection, the expression self-assessed tax shall include the tax payable in respect of details of outward supplies furnished under section 37 but not included in the return furnished under section 39. Now for this section 7512, now for this section 7512, Rule 142.1, Rule 142B procedure has also been provided for DRC 1D. Now the question with respect to the earlier query raised, section 73, tax being paid, interest not paid, section 7512 starting with a non-obstinate clause, notwithstanding anything contained in section 73-74, procedure also in place with insertion of Rule 142B. Now, can an alternative view can be taken that since the tax has been paid, yes, prima facie it falls under section 73 because tax not paid or short paid includes either the tax not paid within time or tax not paid along with interest. But since there is an overriding provision to section 7512 and there is a process to recover the interest, so therefore it should be recovered under section 7512 and only interest should be recovered in such case without any levy of penalty.
RPG, I don't read that provision in that sense. I read this as a there is no need of a issue of show cause notice if interest is unpaid. Interest, if it is unpaid, it can be directly recovered under a 7512. I read in that way.
So yeah, what you are saying, come again, just missed it.
I am saying for a recovery of interest, there might not be need of a separate show cause notice. It can be directly recovered under 7512. Having said that, if they want to recover a penalty, they can still initiate action under 73 and they can still demand of a penalty. So every time for a recovery of interest, there is no need of issue a show cause notice. That's what I'm trying to say.
So Nilesh, if the interest has been recovered under section 7512, so then in that case, the tax along with interest has already been recovered. So there, in that case, section 73 would not be applicable. However,
I agree.
Just yes, Nilesh.
I agree. In that case, then a provision will not be applicable 73 because interest has already been paid.
But here, just recently, Kerala High Court has given a decision wherein they had said that if there is a self-assessed liability which has not been paid and a notice has been issued under section 73, then a fresh time limit of 30 days would not be available. So this was a recent decision which was given by Kerala High Court. So in my opinion, for this query, yes, if any other views are there.
Yeah, I don't think that we can apply the Kerala High Court decision for all cases. For 17 and 18-19, the explanation to 7512 was probably not there. So probably 73 was the way to go. But after the insertion of explanation to 7512, probably 7512 would override 73 for all purposes of taxes and interest, as long as it's declared in GSTR1. So in the context of the present High Court decision, it was for 73, 17, 18. So we have already taken arguments that 7512 had an explanation inserted prospectively and direct recovery cannot be done. So only in that context can we say that 73 was required, and since 73 was required, 7311 naturally followed.
Yes, Uniji, this is one way of seeing the entire thing. But coming to the query and changing the facts, this is for a tax not paid and tax short paid. Now, if the issue is not relating to tax not paid and short paid, the issue is relating to ITC wrongly availed and utilized. So in that case, 7512 would not be applicable. And supposedly, if the ITC has been reversed, but interest has not been paid, then in such case, 73 would still be applicable?
73 is applicable, sir. My view, because there are two types of reading in this. When we read section 73(1) or 74(1), it says, where it appears to proper officer that so and so has happened, then in that case it says requiring him to show cause notice as to why he should not pay the amount specified in the notice along with the interest payable thereon under section 50 and penalty leviable under the provisions of this act or the rules made thereunder. So Arpit sir, I would request to please refer section 73 over here so that I can show my reading towards this.
Yes. Yes, it is ability.
Yes. So it says, where it appears to proper officer that so and so has happened, requiring him to show cause as to why he should not pay the amount specified in the notice, along with the interest payable thereon under section 50 and a penalty leviable under the provisions of this act or the rules made there. So the first reading says that it cannot be read isolatedly, that only when the tax is payable, then the interest and penalty shall come into the picture as per this provision. This is the first reading, because if I read it so isolatedly that interest can only be on interest can the show cause notice can contain interest only and only when the tax is payable. If I read in that manner, there will not be that can only be a proper way of reading, because that cannot be a proper reading because penalty is also there in that. So if there is a view that the tax is payable, then only the interest can be there, it will make that reading absurd, because for the penalty provision also 73 can be invoked. So interest also for penalty also 73 can be invoked, and that is why we cannot say that interest can only be charged when the tax is there.
So Vijay, summarizing the entire issue, that whenever we receive a notice for payment of interest, we have to see whether it is for a self-assessed liability or otherwise. If it is for a self-assessed liability, we can invoke the benefit of section 7512. We can invoke provision of section 7512. So thereby, even if the tax is recovered late, the taxpayer would be saved from the penalty. But if it is for wrongly availed or utilized ITC, then in such case, section 73 would have to be invoked, and even though tax ITC would have been reversed, but then also the penalty would be leviable. Yes, Malhotra ji.
I'm of the view that for penalty there is separate section 122 and all those sections are there. So show cause notice can be issued under those sections, under that chapter penalty wale mein. So I think here if only penalty is there, then 73 is not required. Okay, and in case of 73, the main thing is tax. If the tax is short paid or not paid, then interest and penalty. So it is like that, sir. Because for penalty, we have got a separate chapter where a proper show cause notice will be served. That's my humble view, sir.
So Malhotra, you have just tipped with the next question which I was taking, because we have a time limitation up to 11, so I will not be able to take.
Just a small point. Niji saying was the explanation was inserted and it should be read as a prospectively. But department will always try to push it that the explanation has to be read retrospectively because it is the explanation which is in a clarificatory in nature. So what would be the position on that part?
No, Nilesh, what Unniji was saying, that prior to, if any proceeding has been initiated prior to the explanation being inserted, if any proceeding has been initiated after the explanation has been inserted for any period, for a period prior to the, then also it would be treated as retrospective. And along with that, there was a decision of MP High Court in case of Kabir Reality, wherein they said without the explanation being inserted, then the liability declared in GSTR 1, for which the 3B has been filed for 0, that is a self-assessed liability.
Oh, thanks for clarification.
So, Malhotra ji has skipped to the next question, that whether section 122 is at all required to be invoked for levy of penalty in the section 73-74. We are very commonly receiving show cause notices wherein it is said that why not a penalty be levied under section 74, read with section 122. Now the question is whether reference to section 122 is at all required to be made along with section 74. Just trying to highlight the relevant provisions before I make the discussion open for the house. See, let's take section 74 first, because section 74 says that requiring him to show cause as to why he should not pay the amount specified in the notice, along with the interest payable thereon under section 50, and a penalty equivalent to the tax specified in the notice. So the quantification of penalty is there under section 74. That is a penalty. That is a penalty equivalent to tax specified in the notice. Now coming to section 75. Section 75, 13, which says where any penalty is imposed under section 73 or 74, no penalty for same act or omission shall be imposed on the same person under any other provisions of this act. So 75:13 also says that where any penalty is imposed under section 73-74. So specifically it is saying that a penalty, if penalty is imposed under section 74, because section 74 itself says that penalty equivalent to tax specified in the notice. No penalty for same act or omission. What is the same act or omission? ITC wrongly availed utilized, tax not paid, short paid. This is the, or these are the refund erroneously granted. Now coming to section 122. Section 122(2). Now when we read section 122(2)(b), it says for a reason of fraud, willful misstatement, suppression of facts to evade tax, shall be liable to a penalty equivalent to 10,000 rupees or tax due from such person whichever is higher. So 122(2)(b), although it provides for same offences which are there under section 74, tax not paid, tax short paid, ITC wrongly availed or utilized, or amount erroneously refunded by way of willful suppression or misstatement of facts, all these are same, but the quantification is different. Section 74 does not provide an option of a minimum penalty of 10,000 or equivalent to tax. It only says equivalent to tax, whereas 122(2)(b) quantifies for 10,000 rupees or tax due from such person whichever is higher. So the quantification is different there. And looking to section 75:13, wherein it is clearly stated where the penalty is imposed under section 73-74. If provisions of section 74 were not sufficient enough to levy penalty, and if at all the reliance or the backing was required to be taken under from section 122, 75:13 would not have been incorporated in the statute. And if we go through section 127, where the proper officer is of the view that a person liable to a penalty and the same is not covered under any proceedings under section 73-74. So the person is liable to penalty, but the proceedings are no longer covered under section 73-74. He may issue an order levying such penalty after giving reasonable opportunity of being heard to such person. There is a Madras High Court judgment, if I remember correctly, interpreting section 127, wherein they said that if an assessment has been conducted under section 62, because it is an independent provision for conduct of an assessment, and it provides for creation or demand levying tax and interest. but there is no provision for levy of penalty under section 62. So therefore, in such cases, because section 62 does not have a inbuilt penalty provision, and any tax recovered under section 62 is a tax not paid, short paid. Therefore, in such cases, section 122 can be invoked independently. So this is the entire background of reading of section 73, 74, 75, 127 and section 62, and concluding with, if we go through section 130. Section 130, when it provides for 5 instances of confiscation, it says all such goods and confiscation shall be liable to a confiscation, and the person shall be liable to penalty under section 122. So therefore, wherein the legislature was aware of the fact that the provisions are not providing for levy of penalty, they specifically referred that the benefit has to be taken under section 122, or if it is not there, then the benefit of section 127 can be taken for levy of penalty under section 122. So this is the entire background. Now the issue is open for the House for discussion.
Arpit sir, one observation. When you read section 73, it says penalty equivalent to tax is specified. When we read section 122, subsection 2, clause B, it says tax due. So penalty is being determined on the basis of tax due also. So tax specified and tax due, both are different, and that is why, yes. So that is why section 73 can be invoked. That is again the one reading. So that even though the tax has been paid before issuing the service, before serving the notice, the penalty can be invoked based on that terminology which they are using. That penalty equivalent to tax is specified. Though there are a number of overlappings between and among the provisions. Okay, so I'm not saying that the thing is concluded from my side, but when I read like this, I come to know about these observations.
Any other views from the members?
Now, keeping the issue of whether 122 and 73 are parallel provisions or whether it is a machinery and one is a levy, can I ask a simpler question on the same thing? Whether, let us assume that since there is different mechanisms of issuing notices between the state and center, if state is saying that 73 is a standalone provision, then no reference to 122.2 is required. Let us say that state has not made any reference to 122.2 in the first place in the show cause notice and has assumed that 73.9 is a standalone penalty. If in future courts are going to read that 122.2 is a levy mechanism and 73 is a machinery to levy the penalty of 10,000 or 10%, would the non-mentioning or the non-invocation of 122.2 cause a penalty to fail?
In my opinion, if the penalty, if section 122 has not been invoked, then in such case, the levy of penalty would fail. And at the same time, if 73 and 122 has been invoked together, then also, in my opinion, since the penalty is sought to be levied under section 122 and not under 73, that is also a matter which needs to be challenged. Because for levy of penalty, specific section has to be invoked, and supposedly tomorrow court says that section 122 has to be invoked for levy of penalty and merely section 73 has been invoked, then in such case levy of penalty might fail. Any views of the members on this issue?
And Arpit sir, kindly address that issue also when the notice is issued by referring 73 or 74 along with 122 both, right?
Vivekji, in our cases, we are always challenging wherein both the sections have been invoked, because I treat that section 122 in such cases is being invoked for levy of penalty and not section 74. Yes, Along with this, there is, I also would like to refer to the circular which was issued for levy of penalty. I had made this part of my presentation, wherein the question was for recovering the ITC wrongly availed under section 74. And therein the circular also said that further, as per provision section 75(13) of CGST Act, if penal action for fraudulent availment of utilization ID is taken against B under section 74 of CGST Act, no penalty for same act, that is for said fraudulent availment of utilization, can be imposed on B under any other provision of CGST Act, including under section 122.
Yes.
In my opinion, they referred 122, but I think they intended 122(1).
But then they have said that where the penal action has been taken under section 74. So this is one aspect of the circular which can also be taken in this query, and which was required to be brought before the members for their opinion. So let's move on to the next queries, and we would conclude it within the next 10 minutes. Coming back to query 7, wherein the tax was 1 crore rupees, he paid tax 40 lakh rupees tax, 4 lakh as penalty, and 15 lakh as interest instead of rupees 20 lakhs. How would the SCN propose demand in light of section 74(7)? See, expressing my views, then making the house open. First point is wherein he has paid tax, interest, and penalty as given in the query. But he says that the amount has been paid under protest. Then in such case, SCN would be for entire 1 crore rupees. Second is he paid 40 lakh rupees, 4 lakh rupees as penalty, and 15 lakh as interest. And he justifies that on the basis of my opinion, this calculation is correct, because 4 lakh is penalty and 30 lakhs is my admitted amount, supposedly taking it at 15%, and 15 lakh is the interest coming on that 30 lakh rupees. So in that case, he would make a ground in the appeal that this is the admitted amount and this is the applicable penalty and this is the applicable interest. So therefore, for the balance amount of tax, it needs to be dropped. Third, he does not make any of the two things. He just simply deposits it. In that case, the officer would himself calculate that what would be the penalty applicable for 15% basis 4 lakh rupees. Whatever tax comes, what is the amount of applicable interest, and to that extent, he would drop, provided the taxpayer has not made any written submission and he has only paid the tax referring to section 74(5). These are the 3 broad propositions in which the query can be discussed.
Sir, 74 subsection 7,
Yes.
it says that where the amount of where the amount paid under subsection 5 is falling short of the amount which is actually payable. Instead of using the words falling short of the amount which is ascertained by the taxpayer or by the tax authority. So is there a difference between the tax which is ascertained by the proper officer and the amount which is actually payable? So if it is considered that the amount which is ascertained and the amount which is actually payable, it means that whatever was given in the intimation, let's suppose according to the intimation, it is 1 crore. And if the taxpayer has paid only a portion of that amount, then the SCN has to be for the entire 1 crore.
In that case, 74(5) says the fall short of the amount actually payable. He shall proceed to issue the notice as provided in the subsection 1 in respect of such amount which falls short of the amount actually payable. So if the taxpayer has deposited the tax, penalty, and interest, so what would be the amount which falls short of the amount actually payable? Whether the entire 1 crore would be treated as amount falling short of the amount actually payable, or the part of the amount which has been paid See, there is one High Court decision wherein they have said, wherein the taxpayer said that since I have deposited a tax, I should be given the immunity provided in the section 74(5), and there should be a restriction on levy of penalty and interest after payment of the tax. So therein that the court said that the taxpayer cannot opt for best of the two worlds. He either has to deposit it along with the interest and penalty, and secondly, if he has not deposited along with interest and penalty, then the entire amount remains to be paid. So in the case, the query which we are discussing, the taxpayer has not only deposited tax, he has also deposited the interest and the penalty. Now the question is whether the tax, interest and penalty which has been paid, whether it has to be calculated in the reverse mechanism and then try to arrive at the amount which is falling actually short, which is falling short of amount actually payable, or keeping it aside, the entire amount, for the entire amount the order would be issued and the amount would be appropriated against that amount.
Sir, I think it has to be appropriation, sir, because 74 subsection 7, does it consider a scenario? I mean, I'm talking about a scenario where, say, for a particular issue, an intimation was given, and based on the calculation of the officer, in the intimation, let's suppose the tax payable was 10 lakhs, and the assessee has paid the entire 10 lakhs along with interest and penalty. Later on, if the officer is recalculating it and he finds it that the payable which was actually ascertained by him works out to 11 lakhs, and if he is within the period of limitation, for that extra 1 lakh, he could still, you know, proceed with the under 74 subsection 7, he can still initiate the proceedings for the differential 1 lakh, which is in excess of his own ascertainment. Whether 74 subsection 7 is covering that scenario is what I'm of the view of, sir.
No, Praveenji, in your query, the amount was actually previously 10 lakh. Now the officer is trying to make it 11 lakh. In that case, the earlier SCN has to be dropped and a new SCN has to be issued.
Correct, sir. So in earlier, the officer has ascertained 10 lakhs. The taxpayer has paid 10 lakhs with interest with penalty. Now, since it says that the proceedings would deem to be concluded, now later on the officer finds out that it is not 10 lakhs, it actually has to be 11 lakhs. So for that differential 1 lakh, even though the proceedings were deemed to be concluded, but for the differential 1 lakh, even under 74 subsection 7, he could still initiate the proceedings. By giving a fresh intimation.
No. If the amount has been deposited in pursuance of DRC 01,
then
in such case, fresh issue of show cause notice of 1 lakh cannot be there, because in that case it would be again trying to revise his own order.
Okay, sir.
Once taking, see, there is a SCN, assessee does not deposit it, and prior to deposit, assessing officer drops the SCN and issues a new SCN. That is a completely different thing. But once the amount has been deposited, then in my opinion, the proceedings need to be dropped. Yes, Uniji, you were saying something.
Yeah, to clarify the issue at hand regarding scenario 3 in this example, the question before the proper officer is, if you allocate the 40 lakhs that he has paid, apply 15% and calculate some amount of interest. If that amount will fall under 74(5), which he has already deposited, can the officer reverse work the amount which will fit the amount, some amount that will fall within the amounts that we have already paid, and can take that as payment under 74(5) and reduce the amount from the show cause notice gross amount itself and only recover the balance. Let us, in this example, let us say that 40 lakhs is the amount that is paid. So if you apply 15%, it will work to 6 lakhs. So entire penalty is not yet covered. So if I say 30 lakhs is the amount that is covered under 74(5), apply 15 is that somewhere is equal to, say, 4 lakhs. That is lower than the amount that he has deposited. Some amount of interest that he on the 30 lakhs, if you apply, that is also falling within the interest that he has deposited. So can the proper officer take a view that if you allocate some amounts in the ratio of tax plus interest plus penalty, it will go under 74(5) and issue the show cause notice for a much lower amount and need not go to appropriation at all. So it will save the taxpayer a significant amount of penalty as opposed to the way in which he would have faced if appropriation was the way to go.
Yes, any views coming from the members on this issue?
RPG, in my view, it is not appropriation. The show cause notice would be for a lower amount.
is just adding to what Uniji said and making the query complete in my opinion. Supposedly when the taxpayer has deposited this amount, he has made a written submission that how in his opinion this is the amount which is actually payable. In that case, what will happen? Can the officer adjudicate and then say that no, whatever contention you have made, as per me, this is the amount which has to be, which can be appropriated. Secondly, the taxpayer has not made any submission; he has only paid DRC 05. Can the officer suo motu make a reverse calculation in such case?
Sir, in this case, SCN has not yet been issued. So that is the query. No? The query is how would SCN. So SCN has not yet been issued. It is a situation where SCN is yet to be issued. So before the officer adjudicates the amount, he'll need to issue an SCN. We are at that stage. So 74.5 and 74.7 is regarding that. After the SCN is issued, then there is a later provision. This is at this stage, SCN has not been issued, and it is very clearly said that whatever amount has already been paid, that would be whatever is just falling short on that, the notice would be issued. So notice will contain only the remaining amount. It will not be that the penalty on the entire amount would need to be paid. That will be my view. If we say that if we take the situation that SCN was already issued, now he has paid part of it, then that is a different ball game altogether.
Guruji, while making a payment through DRC 03, a taxpayer can always attach his explanation along with the payment in DRC 03. So the officer before issuing the SCN would also be knowing that this is the amount and this is how this has been calculated by way of 40 lakh, 4 lakh or 15 lakh as the case may be.
Yes. So the tax would need to be, first thing is how much is the tax? So whatever is the total tax, say in this example, we are saying tax is 1 crore. So he has paid 40 lakhs. So the show cause notice will be for 60 lakhs and interest and penalty on that amount.
Only on 60 lakh rupees. Although the penalty has been paid on at the rate of 10%, not for 15%.
Penalty has been paid at 10%. So
yes, 40 lakhs or 4 lakhs.
40 lakhs and 4 lakhs has been paid. So
yes,
penalty would be on 60 lakhs, it would be 100%. The penalty falling short would be 5 lakhs. And interest also falling short 5 lakhs. 20 was the interest, 15 has been paid. So those are the amounts which are falling short. The interest and the penalty which have been short paid, again on that penalty, and that cannot be levied. We cannot increase the amount of tax to 1 crore and appropriate these payments. Tax has already been paid for 40 lakhs. So the SCN has to be on 60 lakhs. And whatever is the amount short paid for interest and penalty, that also. So shortfall for all the three headings.
And what Guruji is saying, if I can understand, that even though the tax is for 1 crore rupees, but since 40 lakh has been deposited, so the entire SCN would be based on 60 lakh rupees. And the penalty would also be on 60 lakh rupees and interest would also be on 60 lakh rupees.
No, plus the shortfall of the penalty and interest.
Plus the shortfall of penalty and interest. The second view can be in such case, because somewhere down the line, these issues are get to be settled going forward and cannot be closed here. But the second view might be that since the taxpayer has uploaded his observation and he has paid 4 lakh rupees, so therefore in that case the officer can backwork the entire amount based on 4 lakh rupees and arriving at the tax amount and the consequential interest amount and deduct it from 1 crore rupees, and rest he can, supposedly 30 lakhs is the tax amount. So the SCN would be issued for 70 lakh rupees, tax would be, penalty would be on 70 lakh rupees, interest would be on 70 lakh rupees, and whatever excess is there for penalty, say 1 lakh, for interest, say 5 lakh rupees, that would be deducted from the interest applicable on 70 lakh rupees. This is the another view. And suppose if the taxpayer has not uploaded any explanation, he has only deposited DRC 03, in that case, in my opinion, the entire SCN should be, this is my opinion, entire SCN could be for 1 crore rupees, penalty on 1 crore, interest on 1 crore, and whatever has been deposited can be appropriated against the same.
Pardon me, I need to add one more twist in this. Yeah, so let us assume that in the same example, it is for one single supply and one tax due for that one supply for a one tax period. In that case, the 74(5) liability would be always 1 crore plus appropriate interest and 15 lakhs penalty. So going by the Kerala High Court decision, that Mohammed Siba case that you had already referred to. Now, can the department take a stance that for that single supply, even if you wish to comply with 74(5), it has to be for the gross amount. So unless you comply with 74(5) for that supply and that tax due itself, 74(5) does not apply at all, and I have to issue SCN for the gross amount. And no deduction is allowed. So the root question is, does 73 and 74, as the case may be, apply per supply, or is it per taxpayer, or is it per tax period and per subject matter?
So 74(5), referring to 74(5), what Muniji has said. The person chargeable with tax before service of notice under subsection 1 pay the amount of tax along with interest payable under section 50 and a penalty equivalent to 15% of such tax on the basis of his own ascertainment of such tax, or the tax as ascertained by the proper officer, and inform the proper officer in writing of such payment. So again, the question is on the basis of his own ascertainment of such tax. So if there is a single supply, supposedly if there is a single supply, in that case also the explanation has to be from the taxpayer that this is the ascertainment on the basis of which I have paid, and that's why in my opinion the tax is only 40 lakh rupees and the applicable interest and penalty I have deposited. But supposedly he has only deposited part payment and there is no explanation of how he has deposited this 40 lakh rupees or how he has come to this 40 lakh rupees. In my opinion, then in such case, dropping of the part of the penalty, a part of the amount of tax, interest and penalty would be difficult.
So is it safe to say that we need to see 74 subject matter wise as well as period wise?
And basis upon the explanation which has been funded, that how the taxpayer ascertained, because it is not say the tax on the basis tax which has been deposited, it is on the basis of his own ascertainment of such tax. So there has to be an ascertainment that in my opinion this is the final liability which is to be paid, and I have paid on the basis of this ascertainment. If there is no ascertainment and only deposit is there, in my opinion 74(5) would not be considered to have been complied with it in that case. Because similarly 74(5) also says tax as ascertained by the proper officer. So the onus is on both on the taxpayer or the officer, that whenever either the taxpayer depositing voluntary or the officer is asking something, there has to be an ascertainment based upon a logic, and only in that case 74(5) or 73(5) would have an applicability. But merely an amount has been deposited without any ascertainment, then 73(5) or 74(5) in my opinion does not have an applicability. It would only be an amount deposited for which the entire amount SCN has to be issued, and the amount which has been deposited can be appropriated because it is not backed by any ascertainment.
Arpitji.
Yes, sir.
When we talk about DRC 03, it is not a payment in installments. It's a creation of voluntary liability. That is what is happening. The taxpayer is determining the liability. That is the purpose of DRC 03. So if the demand has already been created, then he makes deposits by way of challan or sets it off from cash ledger. Then what scenario you are pointing to, I'll agree to that wholeheartedly. But when it is being paid through DRC 03, taxpayer is creating a liability. His liability ledger reflects that, and it reflects that that liability has been set off. So that liability cannot again be initiated by that. He has, since it may be a valuation issue, or he has not given any explanation with that. He has not attached any document. But the fact remains that liability has been created. So again, the liability cannot be created. Even it is just a proposal that liability would be 1 crore and 40 has already been paid. So what will it be? Adjudication would be the remaining amount only. It cannot be that the liability of 1 lakh is adjudicated, 1 crore in this case is adjudicated, and the already amount paid is said that this amount is paid towards that liability. Liability has already been created for the part paid amount through DRC 03.
This is the view coming from Gurjit. Any other views from the members?
Yeah, sir, adding to just what Gurjit sir has told, when can an appropriation be done, sir? Where a taxpayer, let's suppose he has his own self-assessed the taxes and paid the taxes. So those taxes which are self-assessed by the taxpayer himself, is it open for appropriation at the first question, sir?
See, self-assessment or the creation of liability is through 2 ways. One is through filing returns, one is through DRC 03. In both these situations, the taxpayer is creating by filing return, that is self-assessment, and by DRC 03, it is voluntary creation of liability and paying of that. So it is not an appropriation. It is only that the officer is of the view that the amount which has been paid is not the amount which was liable to be paid. And this is the shortfall. He has determined the liability as this amount, but in the officer's view, it appears that the liability should be this amount. So what has already been created as a liability, that cannot be created as a liability. Appropriation will come once a liability has been created. When taxpayer is creating a liability of the amount which he is paying through DRC 03, he is creating the liability and he is paying towards it.
Yeah, even I'm of the same view, sir. When the taxpayer himself has self-assessed it, either through returns or through DRC 03, and he has paid the amount, how can there be a question of appropriation?
Yes, I'm also trying to say that on the same subject.
I believe the appropriation habit came into being because earlier days we just simply remitted challans in excise and service tax regime, and they had to issue orders to appropriate the same. So same practice they are continuing into GST for the DRC 03 as well, wrongly.
Yeah, it is only because it is coming that we are not attaching proper significance to DRC 03, that it is a creation of liability itself, because that was not being followed in earlier regimes. We were just paying through challans, depositing the amounts. So that was it. So in this aspect, GST is a little unique, or maybe the mechanism of DRC 03 is just depositing into amounts into cash ledger, then it will fall into that.
But Gurjit, what the courts have been recently holding, that merely payment of deposit DRC 03 without the acknowledgement of the officer would not be treated as the admission of liability, and it can always be claimed as a refund. So how the things are evolving for DRC 03, there is an alternative view that merely payment to DRC 03 is not an admission. It is only an amount which has been paid subject to acknowledgement or a confirmation given by the taxpayer.
So we'll have to go into the details. I'm not sure whether the courts have been updated with all this information or not. So because those facts in the case, how they are presented, many a times those issues are coming up, whether court has been made aware of these things or not.
And
we
probably the way
a lot of judgments where the court is going as per the earlier laws. So the legacy laws and judgments are very, very valuable, but we have to make a distinction. We can't just read every legacy judgment into the current this thing. All of us also as practitioners and taxpayers, officers, as well as the adjudicating authorities or the higher authorities, they are still into that setup that, okay, the legacy judgment, this is what it is saying, we'll go according to that. That is my view. We have to be aware of these things, changes which have been made, they are also significant. Sorry.
Yeah. And regarding the DRC 03, we cannot see DRC 03s that has been paid in the same light. Some were paid under 73(5) and some were paid under others where the taxpayer himself says this is a pre-deposit under protest without admission of liability. So we have to read the court's judgments where the taxpayer himself has admitted the liability in a different light as to the cases where they're saying upfront that it is not an admission of liability. So in the famous case of Bundle Technology, Swiggy, if you look at the DRC 03 that that was attached as part of the judgment, they have selected the category others. And in the narration part itself, they have clearly said that there is, even though system-wise it might create a liability, but we are not accepting the liability, and it is only a payment we are making voluntarily upfront till the conclusion of the proceedings initiated against us. So just because a DRC03, even if technically it creates a liability in the system, it might not be treated as a liability in the first place as far as the taxpayer is concerned.
And Onishi, there is also one recent High Court judgment wherein the assessor deposited the amount, and before DRC04 being issued, he had claimed the refund of that said amount on specific issues. And the court held that since acknowledgement was not there and refund was claimed, so therefore it cannot be treated as an admission of liability merely because it has been paid to DRC03.
Yeah, this is an exceptional sort of a situation. Otherwise, if payment by DRC03 has been made, it is the obligation is on the officer to issue an acknowledgement. So he has to issue a DRC04 acknowledging that. If they are not issuing that, that does not take it away that the liability has not been paid off. This was a particular situation, the example which you are going, that is a little different situation.
And one thing I would like to update, yes, Arunji, you can take over the session after this.
I would
One
like
last
to
update to remember that what is happening in Jodhpur, and it might be happening in other cities as well, that when an audit is being conducted and an intimation is being sent and DRC03 is being issued, DRC0 and that amount is being paid to DRC03. Now here in CGST Commissionerate at Jodhpur, they are additionally taking a undertaking from us that this amount has been deposited and the amount would not be claimed as a refund, and this amount can be treated as an admission of the liability created through the ADT02 intimation.
Sir, I think the amounts which are paid under protest, like what Unisa was saying, those are the only amounts which could be appropriated by the officer, sir. Otherwise, where the amounts are self-assessed by the assessee himself, either DRC3 or through returns, there is no question of appropriation which can be done, sir.
Arpitji, I was just sharing that, in West Bengal, there is a change now. They are in DRC03. State tax investigation authorities, they are issuing DRC04 now. As soon as you submit your DRC03, they're verifying your claim and as to why DRC03 has been furnished. If the supporting is there, they're issuing the DRC04 then and there. If not, they are asking you further documents. And as far as central tax is concerned, they have started issuing the process of issuing DRC04 from 21-22. They'll do 21-22 first, then 22-23 first, then 21-22, then they'll go backwards. So I think once this process, as Gurjit sir was sharing, this process of issuing of DRC04 is started, I think the appropriation issue will get a kind of a proper settlement. Because till then, as Praveenji was also sharing, only where I'm paying under protest, that should only come under appropriation. If I've already accepted a liability and paid the tax and interest, I think there should be further appropriation on that account. Because in many matters, we are seeing that though you have paid to DRC03, in the final DRC07 order, they are not mentioning that. And when we are being asked, they are saying that we have, like as Arpitji was rightly sharing right now, they're saying that we don't have any declaration from you saying that you're not going to claim a refund of this. So I think that is there. But as we have already, the time is over. So I think I would like to thank thanks to Arpitji once again, for the kind of insightful deliberation that he has had. And also like to thank all the participants, because it's only because of your presence that we really have interactive discussions. Like maybe you are sharing some points or you're writing some points, or even if you're not sharing or writing some points, maybe there are some issues which you are going back and, you are putting in the group. So anyway, ways, we are getting benefited by the deliberation discussion. So thanks to all the participants for joining in. And today we had a bit elongated discussion from 8:45 to maybe 11:30, but this is not the norm. We'll have it from 9 to 10:30. Today we had to back up 2 sections, that's why. Because we didn't want to delay the session of Arpitji and ESG. So we wanted to have it today. So looking forward to meeting all of you, the next week. We'll be discussing on exemptions. So thank you very much. And final words by Unniji.
Thank you, Arup sir. Thank you, Arpitji, for handling the session on 73 and 74. I'm sure that this is going to be the heated debate that is going to happen in the next 2 months till the time for 17, 18, and 18, 19 are over. Most of the issues that we've discussed, I'm sure that they will be tested in the courts of law very soon. So let us see how the law is going to evolve, and let us see how our interpretations will stand the test of time. The great point
They're
that
only
we
on the
are
tip of the
able to
iceberg.
Yeah, the great point that I have to wish not only you, but to all the members who have participated today, the kind of interactions that we have during our SMSs. Every Saturday, it appears that we get one more idea that we have not yet thought about on the same section that we've been reading for the past 6 years. And that is something that is continuing to amaze me. Even today, we discussed section of the levy provisions of Customs Act, where Yashji again managed to surprise us with his own interpretations, which we would not have thought about ourselves. So again, I'm sure that this trend is going to pick up, and we'll have more and more invigorating sessions on the various provisions of the GST Act. So we are only at section 9 now. 10, 11, and 12 are on the way. So I believe that we'll be having a lot more sessions, and I expect everyone to volunteer yourself and add your names to the list that is in the group masthead, and so that we can schedule the arrangements of the sections and the sessions properly. So requesting you all to just check into the masthead, check the calendar of the due dates, where we are planning the future sessions. And you can ideally prepare yourself and inform us that these are the sections that you are planning to give us and enrich us with. So with that, I thank all of you for attending the morning meetings. Thank you all.
Thank you all.
I'm ending the meeting. Thank you very much, and have a wonderful weekend ahead.